Market open a minute to go until the start of cash equity trading. I'm Tom McKenzie in London. Gina Martin-Adams joins us on set this hour. And here are your top stories. Prepare for cut-off. French Finance Minister Bruno Le Maire says Europe must be ready for a complete halt in Russian gas supplies. Nord Stream shuts for maintenance today. 11, chasing number 10, the race to become the UK's next Prime Minister heats up as Liz Truss is the latest to join the contest. Plus, Elon Musk's decision to scrap his bid for Twitter could be decided in court as the social media giant lines up a heavyweight law firm to force the deal through. Okay, let's take a look at futures then, pointing lower this morning after gains of around 2% across European equities last week, slightly more modest across US equities. A couple of key themes. We're watching COVID in China. We're looking ahead to the CPI print, of course, out of the US later Wednesday this week, of course, following that very strong jobs number, just really cementing the view you're going to get at least 75 basis points come the decision later this month. The FTSE 100 currently down by about 0.3%. We're watching basic resources as well. That ties in to the China story. Now lower by 34 points, 45 points on the FTSE 100, keeps dropping. Again, basic resources, energy will be part of that complex across the FTSE 100. The Spanish IBEX now lower by 1.3%. We continue, of course, to keep across the politics here in the UK. As we mentioned in the headlines, we'll have Lizzie Burden on the ground outside Parliament for the latest on who is leading that race to take over from Boris Johnson. France and the CAC 40 lower by 1.8%. Again, as Bruno Le Maire warns that it should be Europe's default now to prepare for a full cut-off of Russian gas. Inflationary implications if indeed that happens. Today is the day, of course, when Nord Stream 1 goes into closure for maintenance. We'll see if it reopens in 10 days' time. Let's switch on and see how things are playing out then as we look ahead to that US Open. Again, digesting that very strong jobs number, 372,000, and a jobs rate, unemployment rate of 3.6%. But it's an inflation number on Wednesday that's really going to be a driver for these markets. The S&P futures currently down at 1%. The US two-year and that yield inversion between the twos and tens remains 308. Not a lot of movement in the session today. Euro dollar, and we continue to watch parity, 1.01 on the single currency, down 0.6%, moving lower once again in the session today. Brent crude 105, softer by 1.5%. We're watching as well President Biden's trip to Saudi Arabia in the Middle East later this week and whether or not he can persuade them to pump more oil. Now, joining me on set this week is Bloomberg Intelligence's chief equity strategist, Gina Martin-Adams. Gina, fantastic to have you on the show as we weigh up all of these themes across the equity markets. What are you hearing? What is your view as to where these equity markets go? We weigh up these inflationary pressures, the risks around gas, and of course CPI out of the US later this week.
Yeah, well, thanks for having me, Tom. I think, you know, in terms of the equity market outlook, it's a very, very tough time because we've priced in a tremendous amount of risk, and yet a tremendous amount of risk remains. We don't have that traditional central bank put that usually creates a turnaround. Yet we've got some signals that lows are forming. So lots of cross currents in the equity markets. The US market, very unlikely to act as a defensive safe haven, which creates a completely different global equity market strategy than we've become accustomed to for the last 10 years. And certainly investors are grappling with all of these cross currents at this time.
Okay, the lack of the defensive nature within US equities at this point, of course, the Fed put dissolving very quickly as we brace for 75 basis points as the next move higher from the FOMC later this month. Let's get over to Bloomberg MLive Managing Editor Mark Cudmore then. Mark, what are you watching this morning, this Monday morning?
Well, like Gina, I really have my eye on this earnings season. But in Asia session today, we were pretty excited about dollar yen as it reached the highest level in 24 years since September 1998. This is a chart of dollar yen over the past 5 years. And you can see the breakout recently really seems quite extraordinary, almost parabolic. It's done more than 33% in the last 18 months. That really seems quite excessive for a currency move between two of the world's most liquid currencies, one of the most liquid, most traded currency pairs. However, if you think this has gone too far, pause and perhaps think again. Because if we go to this next chart I want to show you, we can show that most of this move is actually explained just by yields alone. And that's not the only part of the story. But yields kind of explain a lot of it. The white line here is the gap in basis points between US 2-year yields and Japanese 2-year yields. It stands at 315 basis points now. It was just below 110 basis points a year ago. As of the start of March, it's actually risen about 180 basis points since then. So in the past 4 months alone, it's risen 180 basis points, almost 2 percentage points. And that, as you can see, the blue line is dollar yen. It actually explains this naive overlay. It's a little bit simplistic, but it explains most of the dollar yen move in the breakout this year. Now, of course, there are other issues weighing on Japan. The fact is it's got very, very sluggish growth. It's had a massive terms of trade shock. We're in a global energy crisis, and Japan is a major energy importer. But yields explain most of the move, and the end conclusion is, if you think the dollar-yen move at 30% over the last 18 months is excessive, it can still go a lot further in the second half of this year. As Gina outlined there, there's no central bank put. The central banks are going to continue hiking rates, and that's going to continue putting more upward pressure on dollar-yen.
Mark Cudmore there on the parabolic moves of the yen. Of course, to your point, the LDP's victory in the elections over the weekend in Japan seeming to solidify that policy response in terms of further softness and support, of course, from policymakers in Japan. Currently, the yen is trading at, what, 136, close to 137, down 0.6% in the session today. Let's get back to what happened in the US, though, towards the end of the day on Friday. US employers added more jobs in June than forecast, and the unemployment rate held near a 5-decade low. Signs of both strong demand and a tight labour market that will keep Federal Reserve officials tilted towards another jumbo interest rate hike in July. BTV guests, Bloomberg TV guests, weigh in on the latest data and its implications for Fed policy.
This was a strong employment report.
It is a strong report.
This is a solid report.
But it has one disappointment.
The lack of an increase in participation.
We need labor force participation to go up.
The Fed is going to have to do more.
This Fed isn't stopping.
Interest rates are still considerably below where they're going to need to be.
Today's number just gives them the green light to do that 75 basis point rate hike in July.
This Fed is going to do 75.
Definitely 75, I think, is in the cards.
Very likely to go 75 basis points at the next meeting.
They're going to go to 75. I think they'll get a 50 done in September.
Probably another 50 in September.
Deliver as many hikes as they can between now and September.
But then I think this thing is good. They're going to have to slow down.
And then perhaps think about slowing down the pace of hikes after that.
Okay, let's get into the key market drivers then and the analysis on that jobs number with Pooja Kumra, Senior European Rate Strategist at Toronto Dominion Bank. Pooja, good morning. Thank you for joining us in the studio this Monday morning. What do you make of the jobs report amid the calls increasingly that there's going to be a recession stateside, an unemployment rate of 3.6% and a further 372,000+ jobs added to the US jobs market?
Good morning. Yet another very strong payroll number, as you said. There was no weakness that we saw. Yes, the participation rate is going slow, but it's not slow enough for Fed to slow down right now. So as you mentioned in the news as well, markets are well priced for 75 basis points of hikes in the July meeting and another 50 for September. And I think that is the key message we also got from the minutes, from Sintra, that price stability is still their mandate. But again, markets are focusing on the recession part of it. We actually put 60% probability of recession in 2023, so we are still far back with respect to recession fears.
60% chance in 2023 of a US recession?
Yes. So we do think that indicators will start slowing down, but it's going to come in 2023. So which means that Fed officials will continue their hiking cycles, continue to sound hawkish. And I think this week's CPI report is going to be a key driver for markets again, especially given the fact that last time that was the key reason why Fed officials switched from 50 to 75 basis points.
Pooja, what do you think is priced in the market for this week? What would be a shock versus sort of consistent with market expectations?
I think markets are priced for CPI to come close to 9%, which is clearly 4%, more than 4 times the Fed's target. But I think what would be a shock if we do see a softer core number, a softer number, just because I think markets are now more reactive to misses with respect to any aggregate data. So I think that's where my scare point is, that after the NFP, markets sold off a lot. Hiking fears were back again in the picture. But I think if we see any soft side, that would be where we could see a pretty strong rally, and treasuries will find it hard to stay at the 3% level here.
Okay, so markets pricing in around 9% on CPI. The surveys have it at around 8.8%. Of course, we had that surprise to the upside last month. When it comes to what's happening here in Europe, and fascinating to hear from Bruno Le Maire over the weekend of France saying we should now prepare for a full cut-off of Russian gas into European markets. What would that eventuality do for the ECB and their rate hike trajectory?
Yes, definitely. ECB is actually caught in a very bad situation as compared to the other central banks. So far, ECB is still pointing out to a very optimistic growth picture for 2022 as well as 2023. They are not counting in for any recession, but we think that recession is likely to come by the end of this year, especially given the fact that we might not have any gas. And Nord Stream switching off this week is basically being reflected in markets as well. Today we started with the bull flattening of curves, which basically shows markets are getting scared of recession fears. But I think with respect to ECB, with inflation still above their mandate, they need to keep hiking. And I think that's where they are stuck, that they will be hiking in an economy that is going weaker by the day. And this week's ZEW data will be another way where we will get to know the cracks in this economy. So I think, unfortunately, they still have no choice but to continue with the July as well as September hike. Possibly, we could see a slowdown in pace of hikes, i.e. they will not continue with 50 basis points beyond September. But I think with respect to the inflation mandate, they will continue to keep hiking.
Maybe you can dig in a little bit and talk to us about the trajectory for rates then. If the market is not priced for recession, but really focused on hiking rate policy, what do you see for the most likely outcome for European yields over the course of the next 12 months?
I think with respect to European yields, if ECB continues to hike rates, the front end will always go higher. I think that's what we have seen in the last couple of sessions, Schatz yield and even the 5-year yields, which will get hit. But when we are looking at recession fears, you will see 5-year inflation going down. So you will see basically more flatter curves. So I think with respect to a trading perspective also, we like holding flatteners, both in Euro as well as UK, because we are basically playing central banks hiking cycle plus a recession cycle in these countries. And we also have ECB's fragmentation tool that will be buying bonds. So why not play flatteners here?
Okay, Pooja, fantastic stuff. We'll get more of your calls after the break. Pooja Kumra, Senior European Rate Strategist at Toronto Dominion Bank, stays with us. Coming up, the race to replace Boris Johnson gets underway with 11 candidates now running for the Tory leadership. We will get the latest live from Westminster. This is Bloomberg.
Companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Welcome back to the Open. We are 40 minutes into your European trading day this Monday morning. Currently, you're seeing equity markets across Europe lower by 1.2%. The China factor is certainly at play. Concerns around additional lockdowns and restrictions, a new subvariant reported in Shanghai, and the further spread of COVID-19 across that country. Of course, still digesting that very strong jobs number out of the US on Friday as we look ahead to that CPI print. Again, surveys for around 8.8% out of the US on Wednesday. Let's get back to the politics of the UK, though. Britain's Foreign Secretary Liz Truss has launched her bid to replace Boris Johnson as party leader and prime minister. At the heart of her campaign are tax cuts, including a pledge to make corporate tax more competitive. Let's bring in Bloomberg's Lizzie Burden. Lizzie, which candidates then at this stage of the race, and there are more and more candidates coming through it seems, are leading?
Well, Tom, you've got 11 candidates so far, and as you say, more are expected to announce in the coming days. At the moment, the biggest fault line is on tax, and most of the candidates are trying to distance themselves from former Chancellor Rishi Sunak's position, which is to end the fairy tales in terms of how the UK handles its post-pandemic recovery. Liz Truss, by contrast, is saying that she'll begin the tax cuts from day one as soon as she takes office. And of course, that raises questions about the inflationary impact. But the tax debate aside, the dirty tricks have started already. A video surfaced over the weekend of Rishi Sunak from 2007, where he was somewhat dismissive of the working class. Some people are saying that perhaps that's come from Boris Johnson trying to take revenge on Rishi Sunak for his part in Johnson's downfall. But the Tory party wants to wrap up this stage of the race to get 2 names by July 21st, then allow the membership to vote for the leader by September, although we might have a new Prime Minister sooner than that if there's a big gap between the 2 candidates and one of them drops out.
Lizzie, what does this all mean for Boris Johnson? Is this finally the end of his political career?
Well, many will be hoping so. His aides say that he's going to remain an MP until the next election. Of course, in the meantime, he has the chance to nominate some peers and peerages. Theresa May chose 13, David Cameron put forward 8. But it's said that he hasn't put the list forward to Buckingham Palace yet. Outside of politics, there's great speculation that he'll write a memoir, and that would likely fetch millions. There's a brilliant piece by Max Hastings from Bloomberg Opinion on the terminal. He says, of course, he was Johnson's former editor at The Telegraph, and he says that though a brilliant journalistic entertainer, Johnson is a narcissist of heroic proportions. So surely the memoir will attempt to rewrite history in a way that's kind to Johnson if he's writing it himself.
A narcissist of epic proportions. We're quoting, of course. Bloomberg's Lizzie Burden on the ground outside Parliament. Thank you very much indeed. Lots of reports over the weekend in UK press about the money-making ability of Boris Johnson once he steps down, of course, largely in the US. He's expected to do very well in terms of speeches and, of course, his journalism as well. Let's bring back Pooja Kumra, Senior European Rate Strategist at Toronto Dominion, who is still with us. So we heard there from Lizzie about the tax cut plans of a lot of the leading candidates, the potential inflationary impacts of that then. How do you think about a trade? Is there a trade in gilts around the UK political run-up now?
I think the trade in gilts was something that markets started playing last week itself, and we also were recommending. I think the entire work with respect to conservatives is now towards more of fiscal easing, which will come via tax cuts. And that means that makes Bailey's work much more easier going through with respect to hikes. So that's why we saw a pretty strong bearish move in the front end, and markets are pricing in 50 basis points in hikes for August, September, just because if you have fiscal support for cost of living crisis, Bailey can actually address the price stability mandate, and which we already know that UK inflation reached close to 10% in October. So I think now they can focus on one part of it. But I think one thing we do remain wary about is that as we head to the August BOE meeting, they will not have the forecast as to what this part of the fiscal channeling will have on their growth and inflation. So they will be still using the growth forecast that we got in May, plus the additional fiscal spending that we got from Rishi Sunak. So I think that could add potentially another 0.5% to inflation, and that will just keep adding up. So I think with respect to BOE, this is a clear path for hiking, and that's where you could see the bearish move continue in the front end. Again, another story for flatter curves in UK as well.
What would you expect is the most mispriced potential outcome in the gilts market of a potential leadership change in September?
I think with respect to leadership change right now, one thing is that we have heard more about small taxes and they will come in slowly in the market. But I think if these conservative leaders become more aggressive with respect to having more like a Labour stance with respect to fiscal spending, I think that's where you could see a big sell-off across the curve. Because right now, Labour, Conservative is playing the conservative thing about just sticking to taxes. But I think my fear is that they go even one step further.
Okay. Pooja Kumra, excellent. Senior European rate strategist at Toronto Dominion Bank, on the possibilities around additional fiscal support from these leading contenders as they line up to take over from Boris Johnson. Of course, the implications across the yield curve here in the UK and the question marks for the BOE. Coming up, Twitter is said to be forming a powerhouse legal team as it prepares to take Elon Musk to court. The latest on the $44 billion deal gone wrong. This is Bloomberg. Welcome back to the Open. 23 minutes into the European trading day. Some of the heavier losses being paired slightly. You're down 0.9% across the European benchmark. The selling most pronounced over in France. The CAC 40 lower by 1.5%. Here in the UK, the FTSE 100 down by around 0.8%, just off 55 points. The future stateside losses between 0.6 and 0.8%. We got a couple of individual corporates to bring to your attention. Mergers, acquisitions, part of the story, but as is that commodity squeeze. You're seeing that softer in terms of iron ore and copper, which is why we bring Rio Tinto to your attention. Currently down close to 2% again on the back of softer iron ore and copper prices. That links into the China story around concerns about further restrictions as they pick up this new subvariant in Shanghai. Volkswagen, there's reports there, look, down 2.5%, more than 2.5%. Volkswagen reports in German auto media that some of the new models out of this group, including Audi, Porsche and Bentley, are going to be delayed as a result of some software issues, so keep across that story. And Dufry as well, up almost 4%. This is on the back of the story that this Swiss duty-free company is going to buy Autogrill from the Italian Benetton family, creating about a $6 billion player in the travel retail industry and sector, gaining a 3.8% Dufry on the back of that story. Right, let's get back to one of the other major corporate stories that's been on our agenda for a number of months now. Get set for a titanic legal battle between Twitter and Elon Musk. Twitter has hired a merger law heavyweight as it races to sue Musk for dropping his $44 billion takeover of the company. Let's bring in Bloomberg's Laura Wright. Laura, was this expected? Where do things stand in terms of this standoff, this legal standoff now between the two parties?
Well, it's not a surprise. Clearly, Elon Musk's enthusiasm for the social media platform has decreased while his criticism has increased since we first learned that his offer was accepted the end of April. Now, in that termination filing that we saw on Friday, Elon Musk's team attributed his reticence to a trio of issues. Firstly, Elon Musk feels that Twitter's management haven't been forthcoming with how many fake accounts there are on the platform, and they feel that Twitter has misrepresented spam bots to the US financial watchdog. Interestingly, Elon Musk also unhappy with a number of recent dismissals over at Twitter. Over the weekend, Twitter's chairperson, however, tweeted, "They are working under the assumption that this deal will go ahead at the agreed offer price of $54.20 a share." Twitter expected to file in a Delaware court today, kicking off those legal proceedings. In terms of what happens now, there are a number of potential options. Either a $1 billion exit fee is paid by Elon Musk, or he is forced to go ahead with the deal. They may renegotiate a lower price, or less chance that the settlement happens in the end.
In the end, Laura, what is the best possible outcome for Elon Musk? This is lining up to be rather expensive in any case, but what do you think is his best possible outcome?
It's so unclear at the moment, Gina, what it is that Elon Musk actually wants. Look, over at Wedbush, analysts think this deal really is dead in the water, and they believe that when Twitter opens later this morning, it will trade in the $25 to $30 share price mark. Even Donald Trump, the former US president, weighed in over the weekend. He called Elon Musk's decision to pull out rotten. On a final note, investment bankers who have missed out on some juicy, lucrative fees, well, they're still likely to work with Elon Musk again in the future, given he is the world's wealthiest person and has many business ventures up his sleeve.
All right, thank you very much indeed. Okay, coming up, France says prepare for Russia to cut off gas deliveries entirely. That's as Nord Stream 1 goes under routine maintenance. More on the European energy crisis next. This is Bloomberg.
estudio, nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. Y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes. Según las modificaciones, nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
Wherever you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
Welcome back to the Open. We are 30 minutes into your European trading day, and here are your top stories. Prepare for cut-off. French Finance Minister Bruno Le Maire says Europe must be ready for a complete halt in Russian gas supplies. Nord Stream shuts for maintenance today. 11 chase number 10. The race to become UK's next Prime Minister heats up as Liz Truss is the latest to join the contest. Plus, Elon Musk's decision to scrap his bid for Twitter could be decided in court as the social media giant lines up a heavyweight law firm to force the deal through. Let's check in then on these markets as investors look ahead to that CPI print out on Wednesday. And of course, the concerns that Russian gas will be cut off after this 10-day period of maintenance that starts today. The European Stock 600 is currently down 1%. The China play is also part of this as well around further restrictions. We're starting to see that in place in Shanghai and other cities as a result of the spread of Omicron. The DAX is down 1.5%. Autos, that sector taking a heavy hit. Basic resources also, and energy prices, energy sector under pressure as well. The FTSE 100 here in the UK down 0.9%, almost 1%. The politics is still at play as well. And we were hearing from Pooja Kumar earlier in the show about whether or not you get further fiscal support from the next Prime Minister, whoever that may be, as the leadership contest heats up. Let's switch it over and see how things then are playing out across these sectors. Worth noting as well that in the FX space, euro-dollar parity is also back in focus for us today. The last time I checked, euro was down about 0.6%. This is not the day-to-daily chart that we're looking at in terms of sectors, but the last time I checked, the leading sell-off was seen most pronounced around autos, basic resources, and energy. This is a longer-term mix, but the day-to-day moves are looking very different. Okay, we'll get that chart for you and we'll get it corrected shortly. Let's get you to what's happening again across the European gas space and these concerns pronounced by the French Finance Minister, Economy Minister Bruno Le Maire, that you may get a full cut-off. France says Europe must prepare for Russian gas deliveries to be shut off entirely in retaliation for the region's sanctions on the Kremlin and support for Ukraine. It comes as the Nord Stream pipeline, which runs from Russia to Germany, will go into annual maintenance for 10 days.
We have to be prepared to all options. You know, that's the responsibility of all politicians to take into account the geopolitical situation. We have to take into account that cutting gas from Russia is one of the key options.
French Finance Minister Bruno Le Maire there. Joining us now is Bloomberg's European energy reporter Vanessa Dezem. Vanessa, why is the market so nervous about the Nord Stream 1 shutdown? This is an annual event, routine maintenance.
Yeah, everybody's very concerned here. Nord Stream 1 is one of the most important pipelines in Europe. It is the main corridor for Russian gas to Europe. And yes, it's true, these maintenance works were already planned. It was expected, but the problem is that it happens in a very exceptional moment. This is an exceptional summer, and we are facing a very tight market, which is leading to really high energy gas prices. Europe is already facing high inflation rates, and that also, it all adds to the pressure, you know. And utilities are struggling also to tap natural gas from other resources everywhere else. So it has been a really tough moment for Europe, and concerns are not only really about what's going to happen in the next days, but also what can happen after these maintenance works are over, when they are finished. So the question mark here is whether or not this gas flows through Nord Stream will really resume after these maintenance works are over. If Russia will keep using energy as you know, as a retaliation for all the sanctions that it has suffered for its war in Ukraine.
Vanessa, can you give us a sense as to what Russia's endgame might be here, or at least what the speculation as to regarding Russia? Is the ultimate goal to reduce those sanctions or something else here?
It's hard to predict what's going to happen, and that's exactly, so there's a lot of uncertainty now on what can Russia do, and really this pipeline is very important to supply energy, to supply gas to Europeans, and Europe is now trying to fill up its storage sites to be prepared for the winter. It has targets to fill up those storage sites by November already to really increase those levels, and those flows are very important for the market. And that's why everybody's asking what really can Russia do. And we heard on Friday Uniper's CEO, a very important company in the gas markets in Europe, he was saying that Gazprom showed that it might not be a reliable partner anymore. So it just shows how uncertainty levels here are very, very high in that sense.
Yeah, a lot of uncertainty, of course, around Moscow's unknown actions at this point when it comes to Nord Stream 1. And the implications across the utility space, of course, for corporates and households as well. Bloomberg's European energy reporter, Vanessa Dezem, thank you for the latest. Let's stay on this energy story then, because it is crucial. Joining us now is Ole Havalbai, analyst at SEB, commodities analyst, it's worth noting. Ole, good morning. Thank you for joining us. Let's start with the top picture, the top line on this. What is the material impact across the European economy, across the industrial space, of a full shutdown of gas from Russia into Europe, as France's finance minister warns now could well be the case?
Well, I think it's really important to start here about thinking about this is a routine maintenance, of course. So it takes around 10 days to do the maintenance, and usually we see flows. If you look at the statistics back in time, we see that flows usually disappears for a time somewhere between 14 and 20 days. So that's important to have in mind. But this year, it's really different. Now we're in a super tight situation, as we've just been discussing. And we also seen that Putin's willingness to game the situation is enormous. He has so much to win on gaming the situation he is in now. And we've seen so many different examples on that the last couple of weeks and months. So our base case is that this time the maintenance on the Nord Stream 1 will likely last for longer, and he will hold that gas for as long as possible. And if you talk about a bit on the effects on the market, I think it's important also to mention that Nord Stream 1 is feeding the German natural gas market primarily. And around in Germany, we see that around 35 to 40% of the gas demand is routed into the industrial sector. So what we're seeing now is that Germany is likely to sort of have a kill switch on the industrial sector, hence reducing that demand in the industrial sector, and then giving more of the natural gas to the commercial and residential sector for heating purposes, etc. So that's why what we will see now if the halt is continued. But so far, it's the flow are likely to come back at around two weeks' time. That's at least the plan. But it's important to be prepared for the worst case scenario here.
Ole, how prepared are the markets for this worst case scenario? You talk about the likelihood for an extension of this period of maintenance. Is that already priced? And if not, at what level have we priced that extended risk?
Well, that's a great question. And this is also why you see the natural gas prices in Europe are bouncing up and down like a tennis ball. This is insane. We have never seen this kind of movements in such short periods of time ever before. So yes, the market is now pricing it in. We see a level of 170 euros per megawatt hours. If you convert that to barrels of oil equivalent, that's around 330 US dollars, which is of course huge. So I think the market is really, really nervous. Now they're pricing in a longer maintenance period. But I also think that a complete halt over a longer period of time, then you can basically put your finger in the air and just name a number. Then natural gas could go twice the levels we see now.
Twice, Ole, twice. Let me ask you to put your finger in the air then. Give us your best guess as to where prices go. And you talk about the cluelessness, and I'm quoting you, cluelessness of officials in Europe in terms of how to adjust to this. So put your finger in the air, give us a price estimate, and then give us a sense of where officials are in terms of preparing industry for this.
Well, I think you can see natural gas prices jumping up to around 500, 600 US dollars per BOE. We have seen that before. We saw that in the start of the war. And it's not unlikely that will happen again for, of course, short periods of time. Bear in mind, it's a short periods of time. But prices could spike to these levels because there's so much uncertainty. And I think it's important also to mention that Putin has fully control of the situation. Putin and Gazprom has fully controlled the situation. Europe has no control whatsoever. We just have to live with what's happening and then just go with the flow. I think it's also important to have that in mind. And if you look back in the history, Russia and Gazprom usually delivered around 40% of all the consumed natural gas in Europe. This is in 2019. This is the base case or a year of normality. Now we see they're supplying somewhere between 20 and 22%. And the plan for the EU is to reduce this by around 8% at the end of the year. That's a really, really bold statement. That's probably not going to happen. But you just get the sense of the desperation in the market and also how tight it will likely be going forward. And I also think it's important to have in mind that you saw the inventory levels injection into the inventory levels. That was record high in the aftermath of a few days after the invasion of Ukraine. Now it has, of course, come down significantly because Putin wants to control the situation, and now he wants to control the injection into the European inventories. So we're going into the winter. It will be a really, really tight natural gas market into the winter 2022-23. And last year it was a similar situation. It was also really tight, the natural gas market in the winter. But this year, if it turns out to be really cold winter, then we're all screwed. Then the prices will jump to the levels I'm discussing here.
What do you think, Ole, is not priced by the market? I mean, I think that we've talked for so long about sort of the negative outcomes and being prepared for the worst case scenario. Is there any scope for a sell-off in natural gas at this point? And what is the market potentially missing?
Yeah, I think so, because now you see Kremlin actually came out on Friday and then mentioning that if we get the turbine back from sanctioned jail in Canada, the Siemens turbine, then they're likely to supply more natural gas than what we're seeing now. And as we've already been discussing, Nord Stream 1 is delivering now around 40% of standard flows. And going back to history, they have always delivered on spot, always delivered on long-term contracts. But now they're not. They're now delivering 40%, and they're of course using the turbine case here as an excuse for not delivering the flow they should deliver. But they have mentioned that if they get the turbine back, flows are likely to come back to normal or even higher.
Okay, Ole Valby, analyst at SEB, on the importance of the next 10 to 14 days and, of course, the Russian response as they start that process around Nord Stream 1 and cutting off supplies, and whether indeed they continue at the implications across the European gas space. Thank you for that analysis. Coming up, the race to replace Boris Johnson gets underway with 11 candidates now officially running for the Tory leadership. We will get more throughout this morning. Stay with us. This is Bloomberg.
Of Jamnagar is a money-making machine for Asia's richest man, Mukesh Ambani. His company Reliance has the world's biggest oil refinery complex here in the city. Jamnagar is also where Ambani is making his newest bet, a $10 billion investment in green energy. His ambition is closely aligned with the Indian government's plan to reach net zero emissions by 2070. But Ambani is not alone. India's second richest man, Gautam Adani, has committed $20 billion of investment over the next decade. But India's massive dependencies on fossil fuels have some environmental advocates questioning the realism and sincerity of those green ambitions and those of its two biggest billionaires.
Lots happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management. It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Welcome back to the Open. We are 46 minutes into the European trading day. You're seeing losses of 1% across European equities. US futures, the S&P E-minis pointing lower by 0.7%. The Nasdaq futures pointing lower by 0.8%. For the week of last week, you did end up with very modest gains across the US equity space, slightly more pronounced across European equities. But again, it's risk off in this morning. You're seeing a bid for bonds as well across US treasuries and European sovereigns, most pronounced in terms of the German 10-year, where you've got a 6 basis point move lower on the benchmark German 10-year yield. Now to the ECB then, and Governing Council member Yanis Storanis says a new tool may not need to be used if it's powerful enough. He spoke exclusively with Bloomberg's Caroline Conard on the sidelines of the Aix-en-Provence Economic Conference.
As you know, our policy is characterized by a trio, gradualism, flexibility and optionality. My view is that we'll start with 25 basis points, and then we'll see. As you know, Europe is in the midst of a storm after the war, after the invasion of Russia into Ukraine. Europe is a very large net energy importer, so it suffers from a large negative terms of trade effect. That makes it different from the United States.
But in your opinion, when approximately do you see inflation in the Eurozone peaking?
If the situation is without any negative surprises on the energy front, then inflation definitely will start falling towards the end of this year. and will approach our target in 2024.
Do you think that stagflation is the likely scenario then?
There are stagflationary winds that is blowing. There's no question about that. And this is a very nasty supply side shock. But for the moment, we don't expect negative growth this year or next year on the baseline scenario. I repeat that. But we cannot exclude an adverse scenario, which has to do with negative surprises on the energy front. We might have recession next year. Then we'll consider our position again.
Of course, one of the concerns is, of course, fragmentation. The ECB is supposed to unveil a new tool in order to fight this fragmentation. Do you think there is a danger that perhaps if conditions are too strict, this will make this tool unusable?
I'm sorry, I cannot go into the details of the discussion because the discussion goes on now. It's a very good debate in a very good spirit and good cooperation. I'm sure that at the end of the day, we will have a consensual, efficient solution. Yes, I believe that there is a lot of truth in the idea that if we convince markets that this is going to be a strong tool, we might not need it at the end of the day. We'll have it on the shelf. It is a possibility that if we convince markets that it is like a whatever it takes tool, I think there's a very high probability that it will not be needed. I hope that will surprise markets on the positive side.
Okay, ECB Governing Council member Yanis Stonaris, of course, governor of the Bank of Greece as well, on the need to carry a bazooka versus a pea shooter. I'm paraphrasing, of course, but taking a line there from Hank Paulson pre the financial crisis, or in the midst of the 2008-2009 financial crisis. He, of course, now, of course, the Bank of Governor talking about the fragmentation tool that is being built out by ECB officials. Let's get to the Bloomberg First Word News now with Laura Wright. Laura.
Thanks, Tom. Japan's ruling coalition has increased its upper house majority in an election held 2 days after the assassination of its former leader, Shinzo Abe. The public broadcaster NHK says the Liberal Democratic Party and its coalition partner won at least 76 seats. The result bolsters Prime Minister Fumio Kishida's grip over the LDP and means he probably won't face another national election for 3 years. The Speaker of Sri Lanka's parliament says President Gotabaya Rajapaksa will step down this week after months of protests regarding fuel shortages, surging prices and financial mismanagement. The president fled on Saturday to an undisclosed location shortly before demonstrators stormed his official seaside residence. Inflation is set to hit 70%, with the IMF saying it will continue discussions on a loan program. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Tom.
Laura Wright here in London. Thank you very much indeed. Okay, coming up, brace yourself. Bitcoin could be headed for another steep dive. That is the conclusion of our latest Bloomberg M Live survey. More on that next. This is Bloomberg.
At the Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. Boeing is going to compensate SpiceJet in form of cash and aircraft. There's a big celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
We are in a crypto winter, so again, that could be an area where you dabble. You know, I wouldn't necessarily allocate large chunks of my portfolio to it, but I am comfortable taking, you know, smaller positions.
The volatility is excessive. It's volatility like currencies, but nevertheless, it can find a place in that portfolio. Notwithstanding, you know, what I've said, it's very difficult to predict.
We struggle to find a valuation model. How do you value Bitcoin or the other cryptocurrency? So we have always advised our clients or investors to tread carefully.
It is very much a risk asset rather than a store of value. And it is, in some sense, a bet on a business model that is very much yet to be proven.
My suspicion is that this is here to stay. And I think that, as I said, you know, you write off the mass movement of these, you know, super talented, super ambitious people at our peril.
Okay, some of the guests there on Bloomberg TV talking about how they are approaching the crypto market. Bitcoin down 2.5% in the session today. Wall Street expects the cryptocurrencies crash to get a whole lot worse. As they mentioned, the token is more likely to tumble to $10,000 rather than rally back to $30,000. Gina Martin-Adams, we're very pleased to say, on the show, in the studio with us throughout this hour. And Gina, you were talking in the break about the importance of continuing to look at China. Maybe that's the catalyst to drive US markets today.
Yeah, I am a little bit concerned about what this further shutdown or renewed shutdowns in China might mean for U.S. stocks as well as the global equity markets, mostly because that was the one area of optimism in the month of June. Really, when you look across global equity markets, China and Hong Kong shares were the only shares that managed to produce gains, and now we take that optimism out with the two-pronged sort of China shutdown and tech regulation coming back to the fore. Those issues were largely priced out, I think. Yeah. And they could create a bigger drag on the overall market. Maybe
some naivety amongst equity investors. The CSI 300 down 1.7% or so in the session today. The focus had always been on, yes, an easing regulatory environment, but more support as well from officials in terms of the PBOC and the finance ministry.
Exactly that. And frankly, also support in terms of just the economic engine recovering and powering some supply chain sort of easing, and we just can't seem to get there. I mean, we're 2 years in. At the initial sort of stages of shutdown, everyone thought this would last 6 months.
We have eco data out on Wednesday out of China, trade data, and then retail sales and GDP on Friday. That is it for the European market open. Surveillance Early Edition is up next. Our thanks to Gina Martin-Adams. This is Bloomberg.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
We have to take into account that cutting gas from Russia is one of the key options.
It's great to see so many jobs created. It's great to see wage growth at 5%. It's great to see an unemployment rate at 3.6%. But we need labor force participation to go up.
The country is, with President Biden laying out the plans when he took office, is still moving forward on the job side, but there's still a lot of unanswered questions about the economy. It's still kind of in a very, interesting place.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Good morning, happy Monday, and welcome to Bloomberg Surveillance Early Edition. I'm Danny Berger in London, and all week for Francine Lacqua. Here's what's coming up on today's program. Prepare for cutoff. French Finance Minister Bruno Le Maire says Europe must be ready for a complete halt in Russian gas supplies. Nord Stream shuts for maintenance today. 11 chase number 10. The race to become the UK's next prime minister heats up as Liz Truss is the latest to join the contest. Plus, Elon Musk's decision to scrap his bid for Twitter could be decided in court. The social media giant lining up heavyweight law firm to force the deal through. It certainly is risk aversion throughout the market. Probably will be for Twitter today when we get the pre-market action shortly. But elsewhere, we are looking at European equities that are falling following the Asia session lower. Asia, there's concerns there about the reemergence of COVID. A detection of the new highly contagious variant means that growth concerns are abound. So we're looking at European stocks down 1%. Every sector in the red being led lower, mostly by basic resources. Tech, that's down more than 1%. Nothing is safe in this market as we also concern ourselves about the energy crisis in Europe. A little bit weaker in terms of energy pricing today, thanks to Canada providing a stranded asset for Nord Stream. Perhaps that will help. But meanwhile, it is all about dollar strength. Your Bloomberg dollar spot, that's up 0.5%. The euro at a 101 handle, continuing to slide towards parity. It's that U.S. jobs number on Friday, very, very strong. 75 basis points. Is that a certainty at this point? We're also going to get U.S. CPI later this week, so that inflation number might tilt its hat more towards the fight the Fed has on its hand. Bitcoin, that's also down more than 2.5%. The latest MLive survey says that Bitcoin could have from its current levels, the target there, $10,000. Let me show you what the entirety of Europe looks like this morning. Again, it is a very red morning. It's a lot of negativity out there following a U.S. session on Friday that just barely was flat. Europe was pretty strong on Friday, so it's a little bit of catch-up, but again, it's also that growth story as well, the concern when it comes to China and energy. Are we going to see a stop of Russia flow of gas through to Germany? Now, I mentioned Twitter. I want to show you what the pre-market session looks like. This, of course, comes after Elon Musk said that he was dropping the $44 billion deal on Friday. Twitter says that they will pursue legal action in order to make sure he follows through on that deal that is signed. 8% decline, more than 8% decline is what we're seeing pre-market. $33.65 is where we stand on Twitter in the pre-market session. Well, with that in mind, we'll put a hold on that, revisit Twitter later in the show, but let's get to the UK story. Britain's Foreign Secretary Liz Truss, she's launched her bid to replace Boris Johnson as party leader and prime minister. At the heart of her campaign are tax cuts, including a pledge to make corporation tax more competitive, if I can find my words. Let's bring someone in who always has her words ready to go. It's Bloomberg's UK reporter, Lizzie Burden. So Lizzie, Liz Truss now in the race as well. We know 11 people are in it so far. What does sort of the leading candidate, the top of this race, look like?
Well, Danny, you've got lots of high-ranking candidates. The former Chancellor Rishi Sunak, the current Chancellor Nadhim Zahawi, the Foreign Secretary Liz Truss, and they're dividing on tax as the major fault line to start off with. On the one hand, you've got candidates in an arms race trying to offer the biggest tax cuts, and on the other hand, you've got Rishi Sunak saying that the fairy tales need to end. It's time for fiscal discipline to deal with the cost of living crisis, because of course those tax cuts bring concerns about inflationary pressures. But the tax debate aside, the mudslinging has already begun. A video resurfaced over the weekend of Rishi Sunak being dismissive to the working class. Some are saying that that could have come from Boris Johnson, his former boss, trying to sabotage his campaign as revenge for bringing down Johnson himself. But the Conservative Party wants to bring it down to 2 candidates by July the 21st, and then allow the membership to vote for just 1 candidate by September, though we could have a Prime Minister much faster than that if there's a big gap between the 2 candidates and one of them drops out.
Lizzie, you mentioned the inflation picture. You mentioned what tax cuts could mean for that. I'm looking cable right now, trading below 120. What would all of this mean for markets depending on who is at the helm of the Tory party?
Well, of course, Johnson's resignation raises the chance that we get a general election earlier than we had expected. We thought that one was going to come by January 2025 at the latest. But whichever candidate wins might want to capitalise on their political honeymoon. That means that we might get a run of pre-election spending. And if Labour happen to win the election, we could get some post-election spending. So all of that has consequences for the Bank of England, for the pound, bonds, stocks. NatWest strategists are already seeing faster rate rises from the Bank of England. If the new leader can't get a mandate like Boris Johnson won in 2019, which is seemingly unlikely at this point, it could spell months more political instability, which of course the markets wouldn't be helped by.
Lizzie, thank you very much. Bloomberg's Lizzie Burden outside of Westminster. We're now joined by Agnes Balaish, Chief European Strategist at Barings. Agnes, thanks so much for joining. I want to talk about the wider Europe story, but first starting local here in the UK. When you look at the strategy of the UK, when you look at the Bank of England and their projection of rate hikes, does the Tory government, does who becomes the next Prime Minister make a big difference in your strategy going forward in the region?
Good morning, Dennis. So the UK is probably the only country in Europe that hasn't done much of an active energy policy in terms of supporting demand by reducing prices or putting a cap or giving subsidies. So actually electricity prices in the UK are the highest that they are in Europe. So I suppose the new government can have a role less on or indirectly on central bank policy, but mostly on fiscal policy, and deciding what it does there for energy prices will have, of course, an impact on how much hawkish or more hawkish the Bank of England needs to be.
Well, certainly this market is pricing on when it comes to the whole of Europe as energy being the chief concern. Agnes, I love what you write. The irony of it all is that euro area fundamentals are strong, but still I'm looking at a euro which is quickly on its way to parity. Does the market have something wrong?
Okay, so this is the big dilemma of the moment, which is the fact that governments have not looked straight in the eyes at this energy rationing that's probably going to come in the fall, if not earlier, in July, with this Nord Stream 1 being under maintenance period, and we don't know whether it's going to come back fully. this is a massive shock ahead of us. This completely binary. Either Putin does it or he doesn't do it. There's no scenario exactly that can design how it's going to go, and governments have not really talked about it. And you have this underlying growth, not only from the recovery of tourism and services in general, but also from the manufacturing sector with the easing of supply disruptions or bottlenecks in Asia to some extent, unless of course they come back. But the order book in Germany is 5 months of work without anything happening. So the momentum is quite strong, but of course, if you have the mother of all commodity shocks in front of you, this is not going to sustain really long.
Walk me through that scenario. What would it look like if we do see Russian gas flows to Europe completely cut off?
So the first one is the first risk in the near term, since Nord Stream 1 is under maintenance period today for about 10 days, is if that pipeline doesn't come back. And there is about a quarter of all energy exports from Russia that come through this pipeline, in particular to Germany and Italy, but mostly to Germany. The pipeline arrives in Germany. And there would be two solutions there if it doesn't come back. Consumption would have to fall. That's about a 15% fall in consumption. 50% of German exports of gas come from Russia, and a quarter of that from that pipeline. So that's a 15% fall in consumption that needs to happen. And we know from what the government has said, and that can happen later down the road in the fall, of course, when Putin will have a stronger hand, because it's the start of the heating period. So we don't really know when that starts. But whenever it starts, consumption will have to fall. There's some margin of substitution in energies, but most of it will have to come from lower consumption. And the problem is that energy is an essential good, and it's not something that can be really radically fast compressed. It's something that happens over time. And governments have not really prepared their population for that. So I expect kind of a hard shock on the economy, unfortunately.
But is it binary in terms of whether we get a recession or not? For example, if we don't have Russia completely cutting off gas flows, will Europe still enter recession, but it's just a matter of how deep it is?
Yeah, that's the thing. So for me, I call that binary. If it doesn't cut, if Russia doesn't cut gas exports to Europe, then there's not necessarily a recession at all. And we don't have that in our baseline scenario at the Barings Institute. However, if there is a cut in gas, there's just no avoiding a recession, simply because manufacturing, industry, services cannot work without energy, and energy would be missing. And I would like it, I think I would like it that governments actually try to warn their population about what's ahead.
Agnes, much more to discuss. Stick around with us. Agnes Balaish, Chief European Strategist at Barings. Let me give you another check on Twitter at the moment. Of course, this after Elon Musk said he is dropping his bid. Twitter hiring some top legal force to pursue Elon Musk in the legal system for him to complete this deal, which of course he signed. $44 billion on the line here. Twitter down 6.8% with 10 minutes underway in pre-market trading in the U.S. Coming up, could the Fed be heading towards another jumbo rate hike this month? At least the latest U.S. jobs data suggests it could be so. We're going to have more analysis of that next. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
This was a strong employment report.
It is a strong report.
This is a solid report.
But it has one disappointment.
The lack of an increase in participation.
We need labor force participation to go up.
The Fed is going to have to do more.
This Fed isn't stopping.
Interest rates are still considerably below where they're going to need to be.
Today's number just gives them a green light to do that 75 basis point rate hike in July.
This Fed is going to do 75.
Definitely 75, I think, is in the cards.
Very likely to go 75 basis points at the next meeting.
They're going to go to 75. I think they'll get a 50 done in September.
Probably another 50 in September.
Deliver as many hikes as they can between now and September.
But then I think this thing is good. They're going to have to slow down.
And then perhaps think about slowing down the pace of hikes after that.
Some Bloomberg guests there reacting to the strong U.S. June jobs number that had unemployment near a 50-year low. Yields surged after the report. Agnes Belaish, Chief European Strategist at Barings, is still with us. Agnes, we were just talking a moment ago about the binary nature of the energy market in Europe. Talk to me about the binary action in stocks and bonds dependent on whether or not it's hikes on or hikes off.
Exactly, ho-ho, it's hike on or hike off. And the irony of it all is that any good data is interpreted as more hikes, and therefore there is a sell-off in asset prices, be it stocks or bonds. And any bad data is actually a good news for the market because that means less hikes. And it's interesting that the market is so worried about rate hikes when interest rates are so low for now and inflation is so high. And you got to wonder, the situation is completely different in the US and the euro area. But you got to wonder why so much focus on monetary policy when there's very little that it can do about the sources of these higher prices.
It's true, right? It's all about the supply side at this moment. Yes, you can bring demand down, but can you really bring it down low enough to get into line of where supply is? Agnes, what does that mean around how you trade this? Should we be looking past the rate hikes and be looking towards something else?
Right. So it's no time for heroic move, but there is one move on the market that seems to make the most sense to me, which is the role of energy in our future. And I think maybe this crisis, this war has made us realize how important it was to substitute maybe faster than needed from fossil fuel to renewable energy, but also try to find some security in the supply. And the problem there is that switching to renewable is not necessarily going to reduce or improve our energy security or reduce our energy independence, given that the metals and minerals needed to build all these renewable energy actually come from type of emerging markets with whom we don't really have a close, knit relationship. So energy stocks would seem to be diversified over fossil fuel to power the energy transition, as well as those companies that actually produce these renewable sources of energies seem to be a no-brainer. And then you have all these tech companies that actually facilitate those investments in renewable energies, but also we might come back and support working from home in case there is actual energy rationing in Europe at least. And then there is, of course, all the strong balance sheet companies, which would seem to make sense right now as asset managers want to reduce risks. And strong balance sheets are really the name of the game.
But if we do enter a recession this time, Agnes, how different will it be from prior recessions? Because usually energy, you don't want to be there. It's very cyclically exposed. Is it a different playbook this time around than recessions past?
That's the thing, is that if we think about why there is a recession right now, as we just discussed, it's not because the fundamentals of the economy are weak. It's because we're facing this mother of all commodity shocks. This is textbook 101 when you learn economics. And in those economic books, it is caused by a war, and this is exactly what's happening. And in such case, what has value is what is the short side of the market, and the short side of the market is the supply of energy. So you can have traders trying to price in a little bit of demand compression. This is the recession that we talked about that has been weighing on prices right now. But this is not anything that's going to disappear in the next 3 to 6 months. It's going to take a long time to recover the supply of energy we are used to, and or for demand to actually compress. So energy stocks are the guardian of the temple in a way.
Agnes, thanks so much for joining us this morning. Agnes Belaish there, Chief European Strategist at Barings. Now let's get to the Bloomberg First Word News. With that is Leanne Gerrans. Hi, Leanne.
Hi, Danny. The main pipeline bringing Russian gas to Europe goes down for 10 days of maintenance from today. French Finance Minister Bruno Le Maire says the continent must prepare for Moscow to shut off supplies for good. Le Maire says France is doing everything it can to avoid power shortages and needs to be careful with energy consumption while building up gas stockpiles. Now, the Speaker of Sri Lanka's parliament says President Gotabaya Rajapaksa will step down this week after months of protests over fuel shortages, surging prices and financial mismanagement. The president fled on Saturday to an undisclosed location shortly before demonstrators stormed his official seaside residence. Inflation is set to hit 17%, with the IMF saying it will continue discussions on a loan program. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Danny.
Leanne, thank you very much. Coming up on the program, Twitter is said to be forming a legal powerhouse team as it prepares to take Elon Musk to court. We'll have the latest on the $44 billion deal gone wrong. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Economics, finance, politics. This is Bloomberg Surveillance, the early edition. I'm Danny Berger in London. Get set for a titanic legal battle between Twitter and Elon Musk. Twitter has hired a merger law heavyweight as it races to sue Musk for dropping his $44 billion takeover of the company. Let's bring in Bloomberg's Laura Wright, who over the past few months has unfortunately done a lot of Twitter and Elon Musk coverage. Laura, I mean, to some degree, this can't be too surprising that Musk has dropped the deal.
Not too surprising. Evidently, Elon Musk's enthusiasm has decreased while his criticism of the social media platform has increased since his offer was first accepted at the end of April. You can see ahead of the US bell, Twitter down almost 7%. We are seeing somewhat of an inverse correlation with Tesla reacting positively up around 1%. So Elon Musk's team filed that termination on Friday, and really it came down to a trio of factors. Elon Musk feels that Twitter's management have not been forthcoming with information surrounding the number of fake accounts on the platform. They also think that Twitter has been disingenuous to the US financial watchdog. And interestingly, Elon Musk was unhappy with a number of recent dismissals over at Twitter. Meanwhile, Twitter's chair, Brett Taylor, tweeted over the weekend that Twitter continues to work on the assumption that the deal will go ahead at that agreed $54.20 share price. Twitter, in fact, expected to file in a Delaware court today, kicking off those legal proceedings. So in terms of where we stand now, what are the potential scenarios that could take place? Either Elon Musk is forced to go ahead with the deal, or one of the parties has to pay that $1 billion exit fee. Legal consensus is that it will be Elon Musk. Perhaps the two parties renegotiate a lower price, or they settle out of court, but the latter appears to be the most unlikely at this stage.
Laura, thank you very much. Bloomberg's Laura right there with all the latest on Twitter and the battle with Elon Musk. And as Laura pointed out, looking at Twitter falling about 7% pre-market, there's already skepticism about the deal, but that just fueling this will be interesting to see how that shakes out, whether that goes to Delaware and what the court decision looks like there. Now, coming up just 2 days after the assassination of the former Prime Minister Shinzo Abe, Japanese voters hand his party a big victory in elections to the upper house. We're going to take a look at what that means for the country and its economy as the yen continues to drop, trading at a 24-year low. All of that next. This is Bloomberg.
Energy prices and a short supply of key chemicals that produce synthetic fertilizers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertilizer helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down. The manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Prepare for cut-off. French Finance Minister Bruno Le Maire says Europe must be ready for a complete halt in Russian gas supplies. Nord Stream shuts for maintenance today. 11 chase number 10. The race to become the UK's next prime minister heats up as Liz Truss is the latest cabinet minister to join the contest. Plus, Elon Musk's decision to scrap his bid for Twitter could be decided in court as a social media giant lines up heavyweight law firm to force the deal through. The social media giant drops in the U.S. pre-market session. Good morning. Happy start to your week. Happy Monday. Welcome to Bloomberg Surveillance Early Edition. I'm Danny Berger in London. A negative session so far this morning. European stocks trading down in the red as the dress that I'm wearing today. Is what these markets look like. European stocks down 0.8%. We are not just contending with really strong job numbers in the U.S. that more or less solidify that 75 basis point hike, but we still have those growth concerns for China. New cases in Shanghai of COVID, the concern of the Omicron variant, the highly contagious one, starting to spread as China commits to their zero COVID policy. What does that mean for growth? You can see some of the concern manifesting itself in the price of NYMEX crude this morning, dropping back towards $100 a barrel, down 2.5%. Euro parity still on euro dollar parity watch with a 101 handle this morning, down 0.6%. Again, it's U.S. jobs feeding into that. It's the energy crisis in Europe with Nord Stream 2 undergoing maintenance today. Will Russia use that as an excuse to stop the flow of gas through to Europe? Also feeding into the negative sentiment this morning, Bitcoin below $21,000, down 2.3%. The latest MLive survey says we could see $10,000 on Bitcoin. Of course, that's a drop of more than 50%. We're also watching the yen this morning dropping to a 24-year low. All of that off the back of, in Japan, the ruling coalition expanding its majority in the upper house of parliament. Sunday's election are a boost to the current Prime Minister Fumio Kishida, who won't need to face another election in the national sense for 3 years. Voting was held just 2 days, of course, after the assassination of former Prime Minister Shinzo Abe. For more, we're joined by Geerode Reedy, Bloomberg News senior editor in Tokyo. Geerode, so is this a big mandate, or at least a bigger mandate now that Kishida has been handed?
Certainly it is a mandate. There's always the problem with upper house elections and with elections in general in Japan of low turnout. But it certainly does give Kishida a platform now on which to build. Since he became prime minister late last year, he's had to face several elections. First, he had to get the election to become party leader to replace Yoshihide Suga. Then he had to, very quickly after that, about a month after that, he had to do a lower house election. And now this is the final test that he has had to pass in order to get a stretch at putting together his policy proposals. And so now he doesn't have to face the polls again for about another 3 years. That gives him a little bit of breathing room, a little bit of chance to see what he can actually do on the policy front.
To what degree did the shock and the sadness of Abe's assassination just a few days before color the result of this election?
I think it's difficult to tell. We saw a slightly higher turnout than was expected. Upper house elections do not tend to attract a very high turnout in general, and indeed that was the case this time as well. It was not the lowest in history, which many recent upper house elections have been, and the turnout was up a little bit on the last election in 2019, possibly or likely as a result of support in the wake of Abe's assassination. It was a strange couple of days. I think here there was also a little reluctance maybe to go all out on mourning for Abe as a result of the election also being just around the corner.
All right, Gerold, thanks so much for joining us. That was Gerold Reedy, Bloomberg News Senior Editor in Tokyo. We're now joined by Kristen Surik, Assistant Professor at the London School of Economics. Kristen, thanks so much for joining us. So we have this victory coming from the LDP on Sunday, again, just a few days after the shock assassination of Abe. How would you characterize the results of the Sunday upper house election?
Given that turnout was higher than expected, I think it suggests that there is wide support for the policy platforms that Prime Minister Kishida is putting forward. Those are mainly an extension of Abenomics, although not necessarily a name, as well as a push to revise the constitution so that Japan can develop a full-on military.
Yeah, so Abenomics perhaps not in name, but there was an element, it feels, when Kishida first came in, this idea that he wanted to distance himself for it. What does that mean for the legacy of Abenomics and that desire, perhaps, to get away and for Kishida to foment his own path forward?
That is indeed the case. He has come in with a need to distance himself from the previous prime minister. But in terms of the actual content of the policies, it's not too terribly different. So in a way, he's trying to define himself. He's walking a very close, very fine line between taking on the legacy of Abe, which was in many ways very successful for the LDP, the Liberal Democratic Party, while carving out his own space, saying this is not just a continuation of what was going before. But if you look at what's actually going on in terms of increased fiscal loosening and now actually inflation is slightly over 2%, it is very close to the main content of Abenomics.
It is interesting when you bring up this inflationary environment, Japan finally seeing a bit more of it, perhaps not as much as perhaps here in Europe, but we have seen a lot of government turmoil off the back of really high inflation, be it in the US, poor approval numbers for Biden, or in the more extreme cases, you look at Sri Lanka and the protesters there. Why is it in Japan there's a difference there in terms of the general public perhaps not voting in the election based on discontent over rising prices?
Well, first of all, prices aren't rising very much. So inflation in Japan at the moment is about 2.8%, which is considerably less than what we see in the UK at around 11% or in other countries as well. So prices are indeed slowly rising. But not as much as in other places. But it's notable that they are rising in the first place because prices pretty much have been stagnant since almost 1990, which is quite astounding. And where it will hit people in households particularly is that wages are not increasing. So this squeeze going into families has been going on since, for about 5 years now. But there's a sense of general contentment that people get by with enough, that there's enough that education is taken care of, that health is taken care of, that things are just about okay, that people haven't really turned out in masses on the streets or thrown out governments, for example.
So, Kristen, that's the domestic. When it comes to the international, Abe often spoke of a free and open Indo-Pacific. Even sort of the term Indo-Pacific really came into the fore because of Abe. What sort of legacy does he leave behind in terms of a more open, a more global Japan?
There, his legacy is very crucial. It's been very fundamental. He was the prime minister who traveled to more countries than any other prime minister had in the past, signed more trade agreements than any other prime minister, and did quite a lot to move Japan into the global sphere in a new proactive way. If not always in the same sort of limelight as countries with big overseas military forces. However, he was very crucial behind the Trans-Pacific Partnership and has done a lot of sort of back channel work as well, signing agreements. And so in that sense, it's been very important for Japan. The other side of it, though, is Japan's relationship with North Korea and China, as well as now Russia. It's in a neighborhood where tensions can increase quite significantly at the drop of a hat. And so what this will mean going forward, Abe was although he was a very conservative nationalist, he was very good at sort of walking the fine line between claims about Japan's glorious imperial past and being pragmatic when it came to economic issues with its neighbors. Right. And so what goes on going forward, especially with China and Russia, remains to be seen.
Kristen, I'm afraid we're going to have to leave it there. Thanks so much for joining us today. That's Kristen Sirac, Assistant Professor at the London School of Economics. Coming up, France warns that Russia is likely to cut off its gas supply to Europe in retaliation for the EU support for Ukraine. More on that next. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Danny Berger in London. Let's get your Bloomberg Business Flash. With that is Leanne Gerrans. Good morning, Leanne.
Hi, Danny. Dufree, the world's biggest duty-free company, has agreed to buy Autogrill from Italy's Benetton family, creating a new $6 billion player in the travel retail market. The combined group will have 5,500 outlets at some 1,200 airports and other locations. Now, leaked documents reportedly show that Uber lobbied politicians, including the French President Emmanuel Macron, and broke laws as part of its global push between 2013 and 2017. The so-called Uber files of more than 124,000 documents cover when co-founder Travis Kalanick was CEO. In a statement, Uber didn't deny the allegations, but focused on how much it had changed since then. And Macau is shutting shutting down its casinos and most other businesses for a week as the COVID outbreak worsens. The measures return the gambling hub to the toughest pandemic restrictions. These include limits on people entering public markets and daily PCR tests for service workers. Macau last shut its casinos due to COVID back in February 2020. And that's your Bloomberg Business Flash. Danny.
Leanne Gerrans there. Thank you so much. France says Europe must prepare for Russian gas deliveries to be shut off entirely. That's in retaliation for the region's sanctions on the Kremlin and support for Ukraine. This all comes as the Nord Stream pipeline, which of course runs from Russia to Germany, will go into annual maintenance for 10 days.
We have to be prepared to all options. You know, that's the responsibility of all politicians to take into account the geopolitical situation. We have to take into account that cutting gas from Russia is one of the key options.
Let's go to Berlin, where Bloomberg's bureau chief Birgit Jennen is standing by. Birgit, how concerned is Germany over the shutting down of Nord Stream 1 and the possibility that this is the turning point for halting the flow of gas?
Well, the government is clearly concerned. The economy minister, Habeck, has said that really it's totally unclear what is going to happen after the maintenance work. So they are preparing currently for the worst case scenario, which would be that Russia is cutting off gas altogether. But they're getting mixed signals. Some hear that maybe the gas is cut off by 50%, 20%, maybe it's coming back altogether. So the government is actually currently sort of in a limbo, looking at different scenarios, but planning for the worst.
So walk me through the scenario, Birgit, then, if gas was suddenly cut off.
The government has already set in place an emergency energy plan. So that is looking at companies which are systemically relevant, and these companies need to continue to get supply of energy. But at the same time, they're also looking at companies which can do with cutting back gas. So they will ask these companies to basically reduce their consumption. That is one way of dealing with a shortage. The other is basically asking the consumers and also putting some more constraints on the consumer in the energy consumption. And they are also looking at means to pass on the rising energy prices to the consumer. This is obviously for the government the last option, because it would be at risk of turning the tide, turning the public opinion against Russian sanctions, which the government wants to prevent.
Yeah, we were just talking with our last guest, Agnes, who basically said, look, the government hasn't done a good enough job in preparing the general population for that possibility. Birgit, thanks so much. Birgit Jennen there, our Berlin bureau chief, on the latest when it comes to Nord Stream. Now to the ECB, and Governing Council member Yanis Stannars says a new policy tool may not be needed to be used. That's if it's powerful enough. He spoke exclusively with Bloomberg's Caroline Conan on the sidelines of Aix-en-Provence Economic Conference.
As you know, our policy is characterized by a trio, gradualism, flexibility, and optionality. My view is that we'll start with 25 basis points, and then we'll see. As you know, Europe is in the midst of a storm after the war, after the invasion of Russia into Ukraine. Europe is a very large net energy importer, so it suffers from a large negative terms of trade effect. That makes it different from the United States.
But in your opinion, when approximately do you see inflation in the Eurozone peaking?
If the situation is without any negative surprises on the energy front, then inflation definitely will start falling towards the end of this year, and will approach our target in 2024.
Do you think that stagflation is the likely scenario then?
There are stagflationary winds there is blowing. There is no question about that. And this is a very nasty supply side shock. But for the moment, we don't expect negative growth this year or next year on the baseline scenario. I repeat that, but we cannot exclude an adverse scenario, which has to do with negative surprises on the energy front, we might have recession next year. Then we'll consider our position again.
Of course, one of the concerns is, of course, fragmentation. The ECB is supposed to unveil a new tool in order to fight this fragmentation. Do you think there is a danger that perhaps if conditions are too strict, this will make this tool unusable?
I'm sorry, I cannot go into the details of the discussion because the discussion goes on now. It's a very good debate in a very good spirit and good cooperation. I'm sure that at the end of the day, we will have a consensual, efficient solution. Yes, I believe that there is a lot of truth in the idea that if we convince markets that this is going to be a strong tool, we might not need it at the end of the day. We'll have it on the shelf. It is a possibility that if we convince markets that it is like a whatever it takes tool, I think there's a very high probability that it will not be needed. I hope that will surprise markets on the positive side.
ECB Governing Council member Yanis Stanaris there. The ECB having an extremely difficult task on its hand. We're just talking to Birgit Jennen, our Berlin bureau chief, about the possibility that gas flows from Russia to the rest of Europe might be cut off. That coupled with, on the other side of the Atlantic, a Fed which is going at it, really strong unemployment data coming out on Friday. That differential in yield continues to punish the euro. The euro right now trading at a 101 handle. It got very close to parity on Friday, at one point falling to 1.0072. So it narrowly avoided parity off the back of those jobs numbers, but we are quickly headed that direction, consensus building around parity. But all of that also has to do with the strong dollar. The strong dollar has been punishing stocks. You're looking at European stocks right now falling this morning, a lot of risk off. But Mike Wilson over at Morgan Stanley says that the stronger dollar will be one of the massive headwinds for equity markets, especially U.S. mega cap stocks. And look, we've already heard some of the warnings of this. Microsoft last week essentially saying that the strong dollar will hurt their profitability in the second quarter. Already there are concerns for what earnings will look like this season, whether strategists and analysts are too optimistic about earnings, not just the margin squeeze, not just higher inflation, not just consumers less willing to shop around, less willing to make those big purchases, but again, now it's the currency effect as well. So the risk off in today's session, European stocks down 0.7%. France underperforming, all sectors in the red today. Again, it's not just the story of gas, but it's also some of the weakness coming out of China. There's new variants in China when it comes to the Omicron, the very contagious one. Shanghai, China, they remain committed to zero COVID. Again, the concern there, that will slow growth. We're also looking at oil, WTI now down 2%. Well, coming up, the blues might also deepen for Bitcoin. The leading cryptocurrency looks to be headed for another steep dive. That's the conclusion of our latest MLive survey. We're going to have more on that next. This is Bloomberg.
About what they call black soot caused by the manufacturing and consumption of these fuel products in the illegal refineries.
Oil theft, known as bunkering, and the refining of its spoils is worsening the damage from decades of fossil fuel exploitation, creating one of the world's most severe ecological disasters.
Our sacred forests, our homes, have to give way to oil wells, and no one gets much benefit.
Imagine a resident of Port Harcourt who inhales this soot every second in 24 hours, 7 days a week, 30 days in the month, and for years now, we are dying slowly but surely, and our lifespan is reducing every day.
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
We are in a crypto winter, so again, that could be an area where you dabble. You know, I wouldn't necessarily allocate large chunks of my portfolio to it, but I am comfortable taking, smaller positions.
The volatility is excessive. It's volatility like currencies, but nevertheless, it can find a place in that portfolio. Notwithstanding, what I've said, it's very difficult to predict.
We struggle to find a valuation model. How do you value Bitcoin or the other cryptocurrency? So we have always advised our clients or investors to tread carefully.
It is very much a risk asset rather than a store of value. And it is, in some sense, a bet on a business model that is very much yet to be proven.
My suspicion is that this is here to stay. And I think that, as I said, you write off the mass movement of these super talented, super ambitious people at our peril.
Bloomberg TV guest there on what's next for Bitcoin. For what it's worth, we just had an MLive survey, and the majority of the results said that Bitcoin could fall to $10,000. That's more than a 50% decline from current levels. Speaking of big declines, let me get your check on Twitter. It's been trading in the pre-market session for nearly 1 hour, dropping more than 6%. This follows Elon Musk attempting to end his agreement to buy the company for $44 billion. It's alleged that Twitter has misrepresented user data, that it's not giving Musk and his team enough data when it comes to the problem about bots. Jefferies currently, they say they wouldn't be surprised if they see the stock find a floor at $23.50. To give you an idea of what that would mean, Musk, of course, bid for it at $54.20. It's currently about 36% below that, considering this morning's drop. If it goes to where Jefferies says it was, that's another 30% decline. That's around where it was trading near the pandemic levels. They basically said it's Brent Thill that leads the team over there, saying that attention will return to core fundamentals, which they believe have been rattled by this process and headwinds facing the online ad industry. So with Musk gone, it could be a steep decline to come for Twitter. Well, Bloomberg Surveillance Early Edition continues in the next hour. Matt Milley and Kaylee Lyons will be in New York, Anna Edwards in London. More Twitter conversations to come, I am sure. This is Bloomberg.
know that it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccines specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines, and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question.
Great question.
Great question.
Great question.
Great question. That's going to be the best question I get all night. I'm glad you asked that.
Bloomberg Television. Top experts. Great questions. A lot's happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management. It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Fed needs to catch up. They're not just reacting, they are catching up. And that's why they simply cannot wait.
They need to move now. Those consequences will come later, and hopefully they won't have to go too much higher too much later.
Growth is going to slow down. We're all going to be watching the Fed, whether they blink.
What you have is a market that is very laser focused on getting recessionary signals.
What you're going to see is the pause in this rally. We don't think that this rally has much strong legs to stand on, and it isn't sustainable.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kaylee Lines.
It is 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong. Welcome to Bloomberg Surveillance Early Edition. I'm Matt Miller with Kaylee Lines in New York and Anna Edwards in London. Our top stories today: Elon Musk makes a U-turn on Twitter. We have the latest on the likely Delaware court battle as the social media platform hires an M&A heavyweight to file suit. And another challenge to China's COVID-0 policy, a growing outbreak in Shanghai. Meanwhile, Presidents Biden and Xi are set to meet in coming weeks to discuss the easing of tariffs between the 2 largest economies in the world. Plus, a warning for Europe. French Finance Minister Bruno Le Maire says the continent must be ready for Russia to cut off gas deliveries completely in retaliation for sanctions. Good morning and welcome to Bloomberg Surveillance. Kaylee, let's check out what's going on in Asian markets first, because we had an interesting week and we're down on U.S. futures.
Yeah, well, it's mixed in Asia. At least that was the case overnight, Matt. On the one hand, you had Japan actually outperforming. Of course, 2 days after the assassination of former Prime Minister Shinzo Abe, those upper house elections were held and saw that ruling Liberal Democratic Party expanding its majority. Perhaps a sympathy vote somewhat at play there, but nonetheless, that is a sign of stabilization in Japan, so that actually lifted equities higher by about 1.4%. However, it also is seen as an endorsement of Japan's easy monetary monetary policy. So that weighing heavily on the Japanese yen, the big underperformer in Asian FX, trading against the dollar right now at 136.97, which is the weakest level going all the way back to 1998. Now, elsewhere in China and Hong Kong, you saw stocks dragged lower. Part of that drag was in technology. The Hang Seng Tech Index down about 3.9% overnight after Alibaba and Tencent were fined for past deals. But the broader overhang on those markets also is COVID-0, the cases in Shanghai that Matt mentioned. Also, Macau shutting down almost all businesses for a week, including casinos, and that weighing heavily on casino stocks. Bloomberg Intelligence's gauge of Macau casino stocks down about 5.6% overnight, Anna.
Kaylee, European equity markets then suffering from a bit of a lack of confidence, it seems, this morning. This Monday morning, we see European stocks heading lower. The Stoxx 600 down by 0.6% or so. And it's really the hangover still from that data we got out of the US on Friday that's still having an impact here. We closed on European markets fairly positively compared to the US close on Wall Street. So we're playing a little bit of catch up. And also when it comes to that US data, the tightness in the labor market, reminding investors globally about the interest rate hikes that still could be brought forward and introduced by central banks globally, notably by the Fed, of course, and all of that taking the wind out of the sails of risk assets, it seems, and that continues to be the story this morning here on European stocks. The euro is responding to a lot of dollar strength, and Kaylee just went through what we're seeing there with regards to the yen. Well, the euro is on the move this morning as well, but it is really a dollar strength story. We've got the euro weaker, we had the pound down by 0.5% as well, and it's interest rate differentials that once again are to the fore here as that jobs report reminded everybody of just how aggressive the Fed might be when it comes to interest rate hikes. We saw a big surge in yields on the back of that data on Friday. Well, some of that being unwound today, some of those yields coming down. I've got here 2-year French yields, but really the trend is across many different tenors, many different geographies, but yields moving a little lower as we see some buying of those havens. And natural gas prices down by 1.6%. They were down by much more than this, Matt. And this is an interesting nuance to the story. Of course, we all know about the geopolitics and what's going on here between Russia and its supply of gas to Europe. They're shutting down that pipeline for maintenance for 10 days or so. The big question is whether that gets turned on again. But in the meantime, a part that had been missing and was blamed by the Russians for part of the reason they'd reduced the flow in the first place, that part is being returned from its maintenance trip to Canada. And so we'll see whether that changes the dynamics at all when that pipeline is set to reopen.
Watching that closely, of course, the strong dollar is weighing on a lot of commodity contracts today. We have S&P futures down about 0.5%. This after a positive week last week. It was the 9th positive week so far this year. They've been seemingly few and far between, but actually 9, it doesn't feel so bad. 10-year yield coming down just a couple basis points to 3.0616 right now as investors buy that debt. And NYMEX crude, as I said, one of the commodities being weighed on by the strong dollar. Right now off 1.33% or $1.42 to 103.37. So still holding above that $100 level. And Bitcoin falling about 2% from midnight to 20,546. Remember, it ended the week last week at over $21,000. But there's an MLive survey today where I think about 60% of respondents think it's headed to 10 before it goes to 30. Kaylee, did you see that MLive? Are we going to talk about that MLive survey today?
I did, and yeah, we're going to have more on that later on this program. As for what is ahead later on this week, starting today, Nord Stream 1 shuts down for 10 days for annual maintenance, which Anna mentioned. Western allies fearing that President Putin will use the opportunity to cut off gas flows to Europe for good. Then President Joe Biden will take a trip to the Middle East. That's kicking off on Wednesday. Also on Wednesday, we'll get that crucial U.S. CPI data. It's estimated to be near 9% consumer price growth. And Wall Street banks will be kicking off earnings on Thursday, including J.P. Morgan, Morgan Stanley, and Goldman Sachs. And finally, on Friday, China GDP data is released, Matt.
All right, now let's turn to really the juiciest story of the weekend, the Twitter takeover or not saga, which looks set to play out in the Delaware courts now. The social media giant preparing to sue Elon Musk to force him to follow through with his commitment to buy the company for $44 billion, or, I guess, pay the $1 billion breakup fee. Shonali Basak, our global finance correspondent, joins us for more. She's fresh out of Sun Valley, Idaho, where Elon Musk dodged questions on Twitter in his closed-door session on Saturday. What do we know?
Yeah, we know a few things here. We know that this could take months to play out. We know that Twitter is going to hold him to account. They have said so multiple times, and we know from Bloomberg's reporting that they've hired Wachtell to do so. Musk is also very heavily lawyered up. Skadden Arps had sent the letter, but we also know that he's working with Quinn Emanuel, who he has worked with before when it came to shareholder lawsuits, when it took Tesla, or said he would take Tesla private. So, of course, we know that this fight is going to play out in Delaware by hiring Wachtell. Remember, Twitter gets access to Leo Strine, who is something of a grandfather here in terms of Delaware law, given he was a chancellor of the Delaware court himself, and has really overseen issues like this, which come down to material adverse effect. Remember, it's not just about bots here. You have Elon Musk saying, yes, it's about bots, but he's also saying that the business has materially changed and adversely affected by the firing of employees, the hiring freeze, and other business matters that have seriously declined since he first made this offer.
Well, speaking of business matters, let's talk about the banks here, because if this deal doesn't go through, they stand to lose millions of dollars worth of fees.
And remember, what was remarkable is that Friday you had not only the Twitter executives, but also Elon Musk in the same place with one of their bankers, Allen and Company. The other bankers were not there, and some of them didn't even know that this filing was coming to scrap the deal, including some of the equity partners. So we were with some of those equity partners. They were surprised, yes, but also Elon Musk has been known to do this kind of thing before. So a lot of drama certainly
And
about
the spread was huge. I mean, if the market really believed this was going to happen, the stock would have traded above 40, closer to 54.20.
I have to tell you, me and Bloomberg said Ludlow both spoke to investors who were thinking about getting into the stock, but were worried about the risk here into Friday night, which you saw before he scrapped the deal. But listen, guys, the thing here is, what will the next couple of months look like, and what kind of position is Twitter also put into? Their stock has significantly declined since then, and now they're also going to be tied up in a big, messy legal battle. And can they maintain business operations as normal until then?
Yeah, difficult to do business as usual when you're facing this kind of legal distraction. Shonali, thank you very much. Bloomberg's Shonali Basak with the latest on Twitter. Now, for the latest on the COVID outbreak in Shanghai. Well, it's getting larger. Cases have increased abruptly, despite officials declaring victory over COVID after 2 months of lockdowns. Enda Curran, our chief Asia economics correspondent, has the details. Enda, here we are again. Take us through the latest.
Yep, here we go again. Two new things. Cases are at around 70 now over the weekend. That's the highest. It's obviously a very low number, but the highest since May. And at the same time, the authorities have detected a case of the subvariant BA.5. So there are new rounds of mass testing underway in Shanghai. At the same time, China is seeing flare-ups around the country in other key cities, Shandong and down in the south in Guangdong. There's no hit to production or supply chains or anything yet. But the ongoing restrictions and the new mass testing that's being rolled out is again raising questions about what kind of a hit will there be to consumer confidence and, of course, the economy. We will get data on China later this week. We get both GDP and we get retail sales numbers for June. So all of that should give us a bit of a taste to how COVID-0 actually is impacting the economy.
Yeah, we'll look forward to that data at the end of the week. Meanwhile, over the weekend, of course, elsewhere in Asia, we saw those upper house elections in Japan, the LDP expanding its majority. What are the policy implications of that?
Well, the reaction from economists has been that it kind of cements Prime Minister Kishida's economic policy at the very least. It means the government doesn't have to face a national election now for 3 or so years. Prime Minister Kishida himself came out and spoke about the need to push through with policies that tackle inflation. He also said, though, they're going to push through with policies that make sure wages go up as well. So that's going to be a key trade-off to watch how that plays off. But as you mentioned, the overall takeaway was the LDP cementing its majority in the upper house after, of course, the assassination of former Prime Minister Abe. And most people responding to that today said it's just means stability, and it means Kishida can now go ahead and lock in his economic priorities for the years ahead.
All right, Enda, thanks very much for joining us. Enda Curran there, our chief Asia economics correspondent. Now, President Biden says his administration is still discussing possible action regarding U.S. tariffs on Chinese imports. Emily Wilkins, Bloomberg government reporter, has the latest out of D.C. So Biden expected to meet Xi in coming weeks. Emily.
Yes, a lot happening right now with the Washington-Beijing relationship. I mean, first and foremost, Commerce Secretary Gina Raimondo says that she does expect Biden to announce shortly whether he will be reducing some of those U.S. tariffs with China that we saw implemented during the Trump administration. We know that Biden had a meeting on this for the White House on Friday, but he told reporters on Sunday that he still has yet to make a decision. And there's division in the White House over exactly what should be done. You see Secretary Raimondo, Treasury Secretary Janet Yellen saying that it would be a good thing to lift some of these tariffs off consumer goods, get those prices down for Americans at a time of high inflation. At the same time, U.S. Trade Representative Catherine Tai says that those tariffs are important for ongoing U.S. negotiations with China. And of course, this comes as Secretary of State Anthony Blinken met with his Chinese counterpart at the sidelines of a G20 event. The two spoke for 5 hours on a number of topics, including Ukraine. Both sides said the conversations were incredibly candid. Secretary Blinken said that he told his counterpart that China could not be neutral in matters of Ukraine because there was a clear aggressor. And Blinken also said this sort of lays the groundwork for a potential upcoming call between President Biden and Chinese President Xi Jinping in the coming weeks, but no further details yet on exactly when that call will be.
Emily, thanks very much. Emily Wilkins of Bloomberg Government reporting there from Washington. Now, the main pipeline, thinking about what's going on with Russia there, as Emily was, the main pipeline bringing Russian gas to Europe goes down for 10 days of maintenance from today. The French Finance Minister, Bruno Le Maire, says the continent must prepare for Moscow to shut off supplies for good. Le Maire spoke at an economic conference in Aix-en-Provence.
We have to be prepared to all options. You know, that's the responsibility of all politicians to take into account the geopolitical situation. We have to take into account that cutting gas from Russia is one of the key options.
Joining us now for more is Birgit Jenen, our Berlin bureau chief. Birgit, is Germany concerned about Nord Stream 1 and the potential that it could be shut down? Of course, it's been shut down for maintenance, but on the other side of the maintenance, could it be shut down more permanently?
Clearly, the government is concerned. The economy minister, Robert Habeck, has said that it's totally unclear what is going to happen after the maintenance. And they do get mixed signals. On the one hand, they hear sometimes it's going to be cut off 100%, sometimes it's reduced to 50, 20%, or it can go back in full speed after the maintenance. But really, the government, given this uncertainty, is looking at all options, but also preparing for the worst case scenario, which is then that the companies have to ration their energy supply, and therefore they're looking at what companies can actually afford doing with less energy and what really need the full energy in order to keep up the production. This is one thing. The other thing the government is looking at, how can actually the rising costs be kind of compensated? And they are looking at subsidies as well as passing part of the rising cost to the consumers.
All right, Birgit, thanks so much. Birgit Jenen there, our Berlin bureau chief, talking to us about the possibility of Russia cutting off gas. Now, over in Britain, Foreign Secretary Liz Truss has launched her bid to replace Boris Johnson as party leader and prime minister. At the heart of her campaign are tax cuts, including a pledge to make corporate tax more competitive. Let's get more with Bloomberg's Lizzie Burton, who is at Westminster. Lizzie, talk to us about Liz Truss and the other candidates leading the race at this early stage.
Yeah, Matt, 11 candidates have thrown their hats officially into the ring so far, including Truss, and more are expected to do so in the coming hours and days. At this stage, the fault line is tax. So on the one hand, most candidates are trying to distance themselves from former Chancellor Rishi Sunak's position, which is to end the fairy tales and introduce some fiscal discipline in the post-pandemic recovery. The rest of the candidates are in an arms race for who can cut the taxes the most. But really, it begs the question, how inflationary will that be? But also, where will the money come from? Of course, it depends which taxes you cut. Aside from the tax debate, though, the mudslinging has already begun. A video of Sunak being dismissive about the working class has surfaced over the weekend. And the more the mudslinging continues, the harder it's going to be for whoever is the victor to unite the party ultimately.
All right, looking forward to seeing how this one plays out over the next couple of months. Bloomberg's Lizzie Burden reporting from Westminster. Thank you so much. Now let's get back to the U.S. markets and take a look at some stocks moving in pre-market trading. I mentioned the fact that Macau was shutting down pretty much all its businesses for a week, including casinos. That is weighing on U.S. casino operators that have big operations in Macau. With Las Vegas Sands down 4.6%, as is Wynn Resorts. Another stock moving lower is Alibaba. It was hit with those fines from Chinese regulators over past transactions, so that is weighing on the ADRs this morning, down about 3.6% before the bell. And finally, just coming back to that Twitter story after Elon Musk said he wants to scrap that $44 billion deal, you are seeing the shares down hard in early hours, down more than 6% at $34.50 a share. So Anna, almost $20 full below that $54.20 offer price.
Yeah, and we'll certainly get further analysis of that Twitter story and the falling apart of that bid later in the program. Coming up next, though, Freya Beamish joins us, head of macro research at TS Lombard. We'll ask about the rise in yields that we saw on the back of that strong labour market data on Friday. Some of that being unwound this morning, but what did that mean in terms of market thinking? We'll talk about that and the earnings season still to come. This is Bloomberg.
Companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Welcome back to Bloomberg Surveillance Early Edition. We are simulcast on both Bloomberg Radio and Bloomberg Television, and focused firmly on inflation this week as we get a CPI read on Wednesday. I think we're expecting 8.8%. But as we saw last time, if it ticks just 0.1% higher than the estimate, we could see markets go absolutely haywire. Joining us now is Tatiana Dari of Bloomberg Markets Live. Tatiana, I guess inflation hasn't peaked.
Exactly. If you look at what economists are saying, and we could see, we are expected to go here to 8.8 from 8.6, and what is going to take us there is going to be surging gas prices. Yes, we have seen them roll off here in recent days, in recent weeks, but that didn't register that much for June. If you look at the average of the price throughout the month, so the BLS will just take the 4 weeks, average out the price, and we get to 4.9. That is about 11% higher than the 4.4 in May. So that really really big difference, big gap there will take inflation higher. But it remains to be seen about, the other components. What will shelter do? Economists have said that shelter, is one of the areas that once it goes higher, it remains sticky. So really how broad-based price growth will be, that could also impact markets even, beyond the headline measure.
Well, speaking of the impact on markets, let's talk about the bond market, because on the one hand, if it comes in hot, it would solidify the expectation the Fed's going to be aggressive. You would think that means yields higher, but if they move too quickly, the market is concerned about a recession, which has kept yields kind of capped for now. How do you kind of assess that reaction and that tension within the bond market?
So we have to put it in context of the other economic data, right? We got jobs data on Friday, which showed us that the labor market is rock solid. That means if there is any slowdown, we are not seeing it in the jobs market just yet. That means wage growth remains elevated, keeps the pressure on inflation, and also that the Fed is not really concerned about the jobs market just yet, and they will squarely focus on inflation. And a headline number, if it comes in and as expected, it is enough to keep the Fed going at 75 basis points as expected now. But even if you look to September, already futures are pointing to something bigger than 50 basis points. So I think it will depend on the magnitude of the surprise. For stocks, though, they have moved the opposite way as Treasuries completed their round trip above 3%. So I think stocks could be more at risk here from a surprise number.
Okay, Wednesday, that's when we have to wait to get the details there then. Tatiana, thank you very much. Tatiana Dario of Bloomberg Markets Live. And for more market analysis, check out MLIV Go on your Bloomberg terminal. That's where you go for the Markets Live blog. This is Bloomberg.
The Indian city of Jamnagar is a money-making machine for Asia's richest man, Mukesh Ambani. His company Reliance has the world's biggest oil refinery complex here in the city. Jamnagar is also where Ambani is making his newest bet, a $10 billion investment in green energy. His ambition is closely aligned with the Indian government's plan to reach net zero emissions by 2070. But Ambani is not alone. India's second richest man, Gautam Adani, has committed $20 billion of investment over the next decade. But India's massive dependencies on fossil fuels have some environmental advocates questioning the realism and sincerity of those green ambitions and those of its two biggest billionaires.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Now keeping you up to date with news from around the world, here's the first word. Former Donald Trump advisor Steve Bannon has agreed to testify before the January 6th committee. The former president waived an assertion of executive privilege that sought to block Bannon's testimony. Bannon allegedly pressed Trump to try to stop the certification of Joe Biden's presidential victory. The president of Sri Lanka agreed to resign hours after demonstrators stormed his residence. Gotabaya Rajapaksa had stayed in office during months of protests over fuel shortages, surging prices, and financial mismanagement. Sri Lanka is in talks with the IMF on a loan program to help pay for imports of food and fuel. Coming up, we'll talk markets and macro policy with Freya Beamish, head of macro research at TS Lombard. This is Bloomberg.
almost the end of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping, but many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada 1-2 itu ada, tapi nggak kayak dulu. Kalau dulu rame sekali. Sekarang paling dapat jualan ya 100, 120 gitu, 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 itu nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu. Sama aja. Belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. Elon Musk makes a U-turn on Twitter. He's going to take his fight to the Delaware court as the social media platform hires an M&A heavyweight to file suit. That could happen as soon as today. Another challenge to China's COVID-0 policy, a growing outbreak in Shanghai. Meanwhile, Presidents Biden and Xi are set to talk in coming weeks to discuss the easing of tariffs between the two largest economies in the world. Plus, a warning for Europe. French Finance Minister Bruno Le Maire says the continent must be ready for Russia to cut off gas deliveries completely in retaliation for sanctions. Le Maire says France should build up gas stockpiles and accelerate its program to build nuclear reactors. I'm Anna Edwards in London with Matt Miller and Kaylee Lyons in New York. And Matt, European stocks under pressure, perhaps off earlier lows, but still suffering a little bit of lack of confidence in risk assets as we get ready for that CPI print and really feeling the pressure, I suppose, from that tight labor market report on Friday.
Yes, and earnings season. Don't leave that out, right? Because we get to see what margin compression looks like in this reporting season. Take a look at what we're dealing with here in the current moment. S&P futures off just 0.5%. We were up, I should say the S&P was up 1.9%, I think almost 2% at the end of last week. So it was the 9th week this year of gains, and maybe investors are feeling like taking a little profit off the table today. The dollar has been strong, and this is a story that Kaylee and you have both touched on. Of course, we see it against the yen and the euro today, and it really affects commodities. So that's why you'll see, for example, at least one of the contributing factors to NYMEX crude coming down almost $2 now to 102.90. And investors are buying 10-year yield. That pushes the yield, 10-year debt, I should say, that pushes the yield down to right now 2.5 basis points to 3.056. But what's incredibly important and could go either way depending on your view, as Kaylee was just saying there with Tatiana, is how you feel inflation is going to print on Wednesday and what that's going to do to the Fed's decision to focus on inflation rather than worry about a recession. Kaylee, what do you see in terms of pre-market movers?
Well, Matt, we know there's really one story that's capturing all of our attention this morning, and that would be Twitter, after Elon Musk submitted that filing on Friday saying he wants to back out of that $44 billion deal. There is a question as to whether or not he actually can do that. It's likely going to be for a Delaware court to decide, as Anna mentioned. Nonetheless, you are seeing Twitter shares down substantially in early hours, nearly 7%, trading almost $20 below that $54.20 offer price, right now at $34.30. You also have Tesla shares a little bit lower as well by about 0.2%. Another story worth keeping an eye on is Uber. There were multiple reports over the weekend that Uber was lobbying politicians and potentially broke some laws a few years ago when it was trying to expand globally. So that weighing on the stock to the tune of almost 3%. And finally, one other stock to mention, Las Vegas Sands. This is one of the casino operators that has a big business in Macau. And now that Macau is closing all businesses, including casinos, for a week due to a COVID outbreak, that is weighing on those shares this morning, down about 4.6% before the bell, Anna.
Okay, a lot to talk about then when it comes to pre-market over in the United States. Here on the European session, weighed down by fears about tighter central bank policy seems to be the theme. And most of those European sectors are in negative territory this morning. Only utilities and healthcare moving higher. Elsewhere, we see a lot of negativity, in particular for basic resources and anything that is impacted by the global growth story. So basic resources and autos and parts, the worst performing sectors in today's session. We have the euro also under pressure, and increasingly so. 101.11 is where we trade on euro dollar. How quickly will we get to parity seems to be the obvious question we ask when it comes to the euro right now, although a lot of this is to do with the haven that is the US dollar, and seeking that haven today has weighed down on other currencies, and interest rate differentials between the United States after that tight jobs report on Friday. That's very much in the market's mind as well. So the euro is weaker, the pound also weaker, the pound down in this morning's trading session by 0.8% against that stronger dollar. We have European gas prices just a little bit weaker this morning. They were down much more substantially, which was interesting on the day that we've seen the start of that 10-day maintenance period for the Nord Stream pipeline. And the big question, of course, that we talked about in the last hour is whether the flow of gas between Russia and Europe, which is going to be stopped for maintenance then, whether it will be restarted at the other side of that maintenance period, Matt.
All right, we'll be watching that story, of course, very closely. Joining us now is Freya Beamish, T.S. Lombard, head of macro research. And I got to ask you first about inflation, Freya. We see some indicators that it's peaked here in the U.S. If you look at food prices, if you look at energy prices, if you look at metals, right, they're coming back down. But we're still looking for a higher print on Wednesday. What are you expecting?
Even the peaks are I'm still nervous about this because the relationships have all reset. So the relationship between energy and CPI energy, the relationship between food and food energy, the relationship between things that should be driven by wages and actual wage inflation. You're all getting more inflation than you would expect for each of these different segments of the basket. So yes, the peak in year over year, but what we're more interested in is what's happening in terms of the month on month. And in the next few months or so, the best that we can hope for is that the sort of the compositional effects start to even out a bit, and that demand starts to find its new normal. And that starts to relieve a bit of the kind of the old bottleneck inflation that has been such a major component of what's going on here, and that distracts from the ongoing underlying mismatch between labor demand and labor supply, and demand and supply more generally, which we think is probably going to start to come back into the headlines, or if we get this lull, the hope, as I said, but is probably the problem that is going to continue to resurface as the extent of the mismatch between demand and supply in the U.S. economy starts to make itself more known.
Okay, Freya, as you put it, when we return to a new normal then on demand, as there's been so much volatility of late and so many different crosswinds to take into account, where will that leave yields? Because they seem to have swung between various narratives in recent weeks.
Yeah, it's this kind of tug of war between, are we more worried about low growth, or are we more worried about high inflation? And obviously from the bond perspective, the low growth thing should feed into a kind of peak in inflation trends, and start to bring that down and bring you into the kind of the quadrant of the cycle that is more benign towards bends. But unfortunately, we continue to have these shocks coming through, either from the energy side or from the simple fact that composition of demand hasn't yet normalized. I said the hope is that it normalizes, and therefore you get this continual unveiling of different parts of the economy where there has been supply side atrophy, and where we're finding that at the moment is in the services sector as the composition of demand shifts back towards services. So we continue to have these kind of upside surprises. But as I said, the hope is that in the next kind of 6 months or so, you at least get a little bit of a lull there as you get some of the disinflation coming through from the sectors that did well in terms of high demand in the pandemic. And you get some of the commodities deflation coming through in terms of the decline in the level of prices, and you get some of that coming through in goods as well, particularly if you look at what's happening in China.
So Freya, if you talk about disinflationary forces coming in the next 6 months, where is that going to leave the Federal Reserve and their ability to maybe press pause on their aggressive hiking?
So we see a few different scenarios here, and I will tell you our base case is essentially that they have to remain very hawkish, and that the kind of the rhetoric suggests that they won't take anything for granted. Like the whole raison d'etre of these guys is to prevent a rerun of the 70s, and they're scared across major central banks at the moment that is exactly what's happening. So the kind of the base case for us at the moment is that they do just they continue to look at the core. They continue to realize there's still heat in the core. Maybe average hourly earnings growth is starting to soften a little bit, and that suggests in the next few months that the core should start to cool just a little bit as well. But if you look at aggregate pay increases, that's still very, very fast. And the labor market is still, there's such a mismatch between demand and supply. It's softening just a tiny little bit, but the peak in the jolts is where we are in the jolts right now is about 1.5 times where it was the previous peak before COVID. So even for softening, it takes a long time for the Fed to actually be able to turn around. So the base case is that there's this sort of triangle in the expectation for, or the actual Fed funds path compared with what the expectation is at the moment, and the Fed has to continue to be more hawkish than markets are expecting. If more of this, the bullwhip effects start to come through, and we start to see more of the disinflationary forces kind of creating this mirage in the near term, then maybe you get a kind of a more of a validation of market expectations in the near term, but they're unable to support the recovery.
Is it possible to see a bullwhip effect in the labor market? I mean, we're all waiting on cars to be produced and delivered now, but Danielle DiMartino Booth says next year we might see a glut of cars, and the same in housing. Is it possible that we can turn on a dime in the labor market, go from, refusing 5 job offers this week to not finding any jobs next week?
So the high frequency data that we follow from global data, and it's scraped from company websites directly, and it's a good match across the whole globe, and that has turned down and has led the JOLTS data down in the past couple of months. But as I said, the kind of the level of the JOLTS data at this stage is just so high compared with previous peaks. And the supply in the market as well has not quite normalized yet. So participation rate is still low, and there's a missing group of laborers, which is the older generations. And even the kind of the migrant labor has come back a bit, but it's not reached previous trends. Whereas the kind of the things which we need them to be, we need these workers to be kind of the sectors which need these workers at this stage are now experiencing a resurgence of demand. So there's just this big mismatch in supply and demand that's going to take a long time to clear.
Yeah, so even that softening in the JOLTS data, still a tight labour market. Freya, thank you very much for joining us. Freya Beamish of TS Lombard with her thoughts ahead of that inflation print and what we're seeing on other US data. Coming up, Bitcoin could be facing another 50% drop. We will bring you the latest from our Markets Live survey next. This is Bloomberg.
has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
We are in a crypto winter, so again, that could be an area where you dabble. You know, I wouldn't necessarily allocate large chunks of my portfolio to it, but I am comfortable taking, you know, smaller positions.
The volatility is excessive. It's volatility like currencies, but nevertheless, it can find a place in that portfolio. Notwithstanding, you know, what I've said, it's very difficult to predict.
We struggle to find a valuation model. How do you value Bitcoin or the other cryptocurrency? So we have always advised our clients or investors to tread carefully.
It is very much a risk asset rather than a store of value. And it is, in some sense, a bet on a business model that is very much yet to be proven.
My suspicion is that this is here to stay. And I think that, as I said, you know, you write off the mass movement of these, you know, super talented, super ambitious people at our peril.
A few of our guests there discussing what's next for Bitcoin. And the latest MLive survey says the token is more likely to tumble to $10,000, cutting its value roughly in half, than it is to rally back to $30,000. Emily Nicole, Bloomberg crypto reporter, joins us now for more. So Emily, some 60% of people said it's more likely that Bitcoin goes lower than higher in the near term. That's not great.
Yeah, it doesn't bode well, I guess, for Bitcoin's price performance in the near term if we take those investors at their word. But obviously, Bitcoin has been trading range-bound around the $20,000 mark for at least a few weeks now. That's a little bit unheard of in crypto terms, right? Normally, we expect it to be incredibly volatile, and it really has been stuck there. It does kind of signal that investors aren't sure which way it's going to go. And even the results of this survey were quite split. 60-40 isn't necessarily a clear win.
So what do we know about the big whales in Bitcoin? What are the trends right now? Are they having to liquidate to cover other losses?
So what we're seeing is that a lot of the loans that have been made in the crypto space do use Bitcoin as collateral among other cryptocurrencies. Specifically, we've learned that there was a loan extended to Celsius, a lender that is currently facing troubles by Tether not long ago, that was also collateralized in Bitcoin, and that was liquidated a while back. And so we're starting to see how this contagion effect ripples across the market. You don't just see one asset getting affected when one loan has to be liquidated. It's usually a mixture of a lot of different cryptocurrencies. And that's why this is happening across the entire market at once, not just in one asset in particular.
Are we drawing any line in the sand? Are we putting in any fire break, Emily, between what we've seen so far in the crypto winter and what's still to come? Are we still seeing coins collapsing? We haven't talked about one for a few days. Is that positive?
I think it is definitely a positive. You know, this time around, there is a lot more money in the system than there was in the last crypto winter. You know, billions of dollars of venture capital money has gone into this space now. That's propping up these businesses, the programs behind the cryptocurrencies or even the exchanges themselves from entirely collapsing, because they don't just have crypto in their treasuries now, they also have real fiat hard cash. And so that's what makes this crypto winter quite different. Whether or not we'll see another cryptocurrency totally collapse in the way that Terra did, that was quite unique as well. You know, it was reliant on algorithms to keep its price going. It was a very specific kind of experiment with the nature of crypto finance. And so, you know, whether or not we'd see another of those is unknown.
Emily, there were so many interesting tidbits in this survey, one being that retail investors actually were more cautious about crypto than institutional investors who were maybe a little bit more open-minded. Another was that very few people actually saw NFTs as an investment opportunity. Can you just give us those details around that?
Yeah, so picking up on the NFTs, only 8% of investors saw NFTs as anything close to like a real investment opportunity. Most people actually picked them as more akin to art projects or country club memberships, which kind of tells you a little bit about how they're seeing the NFT market right now. We know that sales volume in NFTs has really stalled over the last year, and so demand is really flailing there. And then when it comes to, you know, skepticism around cryptocurrencies, more retail investors were skeptical around crypto, labeling them garbage than professional investors. And actually around half of professional investors that responded to the survey said that they were, you know, somewhere between open-minded to, you know, Bitcoin maximalists, meaning they're completely all in on Bitcoin and nothing else. So it really is quite a wide range of opinion there. And we've definitely got some interesting results.
Yeah, very interesting readout of this survey. Bloomberg's Emily Nicole, thank you so much for joining us. And of course, for more crypto conversation, tune into Bloomberg Crypto every Tuesday at 1 p.m. New York time, 6 p.m. in London. It's Matt and I's weekly show, covers the people, transactions, and technology shaping the world of decentralized finance. So make sure to tune in tomorrow. This is Bloomberg.
the Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. That Boeing is going to compensate SpiceJet in form of cash and aircraft. There's a big celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller with Kaylee Lyons here in New York and Anna Edwards in London. Tom Keene joins us now, co-anchor of Bloomberg Surveillance, to talk about one of the issues we've been highlighting all morning, Tom. That is the U.S. dollar, real strength coming back into the BBDXY.
Matt, it's Calculus Monday. Let's go to it. This is U.S. trade-weighted broad. This sort of is like the BBDXY, brings in the EM stresses as well. Stronger dollar, but slope matters. This is a log chart. And the slope of the 80s up to the Plaza Accord is a lot steeper than the slope we've seen over the last number of years. What we do have is a stunning persistency of strong dollar going back a good number of years. And all in all, it's over 50 years of strong dollar.
Well, speaking of stunning, Tom, I'm sure you will have a stunning conversation later on this morning. Leon Cooperman will be joining you on Surveillance.
Yeah, well, Leon's great. I mean, he and I can go an hour. We've done it. We've actually done seminars where I've gone an hour with Mr. Cooperman. But I'm really, really interested to see what Leon Cooperman thinks away from the equity markets, what he thinks about the carnage in the bond market, price down, yield up.
Tom, thanks so much. Tom Keene with a preview of what's to come on the next hour of programming. Right here and now, though, we'll pick up on one of the big pre-market stories of the morning. To Elon Musk, Twitter, as the social media giant prepares to go to court to force Elon Musk to follow through with his commitment to buy the company. Bloomberg's Alex Webb joins us now. This has to go down as one of the biggest surprise, not surprise stories, I suppose, Alex, because yes, there was an expectation he'd buy it, but there was a growing expectation that maybe he wouldn't.
And it's also been kind of gauging whether it was actually that he didn't want to buy it or if it was a negotiating ploy. Now, it certainly seems like he doesn't want to buy it at this stage. If you look at the reasons why, well, you can see the share price now, admittedly, with the awareness that maybe the deal is highly likely to fall apart. The shares are at $34-ish, I think, pre-market. The deal was at $54. How much of this is to do with the bots, which is what he's saying it's about, and how much of it is really to do with the fact that tech stocks are down, social media stocks in particular are down, and it looks a lot like he was overpaying.
Yeah. I mean, I don't see any surprise in this. If you read Matt Levine or if you watch the stock price, you knew it wasn't going to happen. And the bots, let's face it, seems like pretty much a made-up excuse that he's been using from the beginning.
Yeah, and I mean, there seems to be some sort of discrepancy, even if there is some truth to Elon's perception. Namely, he sort of sees that a lot of the accounts that engage with his posts are bots. Well, that doesn't necessarily mean that Twitter is wrong. It's just that the 180 million or so daily active users that Twitter says it has, well, it may have perhaps considerably more than that if you were to include the bots. So maybe that's the kind of discrepancy or disparity that we're seeing here, namely that Elon is picking and choosing what he sees as active accounts. But it certainly seems to be a tool rather than an actual reason for ditching the deal.
Okay, well, if he succeeds in ultimately ditching the deal, where does that leave Twitter? How much has its business been damaged by this whole saga?
I think the biggest damage has been the stasis, the sort of inability or unwillingness to make major changes, given that there looked like there was going to be a new leadership team coming into place. That's really tied the hands of Parag Agrawal, the CEO. There have been some comments from the sell-side analysts this morning saying that the effect of this, from a management perspective, is going to play out in the second, third quarters and beyond. Having a bit of clarity about where the ownership is going would be the most useful thing for Twitter, I think, at this stage, whichever way that happens to be.
Yeah, a little bit of certainty. I mean, briefly then, Alex, I mean, this goes to court now then. This will be settled in a courtroom.
Yes, and in Delaware, obviously where it's likely to happen, there are interesting precedents to this. 20 years ago, there was a deal in the meat industry, which a lot of people point towards, and in the time between the deal being agreed and the deal being completed, the market collapsed. And so the buyer tried to back out of it, pointing towards actually sort of similar reasons, not sharing accurate data. They were forced to complete that deal. It's a far smaller deal, $3.2 billion back in the day. That seems to be the case law that people are pointing towards as evidence that it'll be really hard for Elon to pull out of this.
Okay, so the precedent from the days of before social media bots, but interesting analysis. Alex, thank you so much for joining us. Alex Webb of Bloomberg Quick Take. That is it for Early Edition. More surveillance is ahead. Tom, John and Lisa will take you through the next few hours. This is Bloomberg.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
pressures on the Fed here, that you have an overheating economy.
Perhaps the economy is not slowing as fast as anticipated.
Growth is going to slow down. We're all going to be watching the Fed, whether they blink.
We're still in that camp of 75 basis points in the July meeting.
They need to move now. Those consequences will come later, and hopefully they won't have to go too much higher too much later.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Live from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance on TV and radio. Alongside Tom Keene, I'm Jonathan Farrow. Back in the sea, it's Bramo. Welcome back, Lisa Abramowitz. It's good to see you. Futures negative right on cue, down 0.6% on the S&P. On the Nasdaq 100, down 0.8%. TK Euro Dollar about that close from breaking 101 all over again.
Yeah, the dollar's a story today with a 107.71 on DXY. The lead for global Wall Street this morning is continued dollar strength. It bears watching. It bears watching against the yen. But, John, I would suggest between the earnings later in the week and critically the CPI guess that we get in the 13th, maybe that trumps dollar study right now.
What are you focused on, Tom? CPI Wednesday, earnings Thursday. What's the bigger issue for you going through the next couple of weeks?
I think the bigger issue is guidance from corporations. I mean, Robert Schiffman, writing from vacation this morning for Bloomberg Intelligence, made clear he thinks big tech has a quality stream in the second half of this year. We need to get guidance. It's going to be nuanced guidance. I think it helps, John, corporations to be clearer this time around than normal.
Lisa, you've been missed. Let's put the two stories together. The dollar strength and the earnings story we're expecting, and the work of Mike Wilson and the team over at Morgan Stanley over the weekend. Some big news, some big numbers in that particular report.
Basically saying that the move that we've seen so far in the dollar, the strengthening of somewhere north of 10%, 11%, is commensurate with a much bigger decline in earnings per share than people currently are pricing in. We hear companies worry about the strong dollar and what the fall-through effects will be. How much do we see that really baked into estimates in a way that surprises to the downside?
Don't you love how Mike gets your Sunday started? He concludes by saying the recent rally in stocks is likely to fizzle out before too long. Enjoy your Sunday. Lisa, when it comes to earnings, that's the great divide between the bulls and the bears going through the rest of this year. It comes down to just that E.
Well, and it's not just the bulls and the bears on the macro side, but it's the bulls that you see in the corporate-specific analyst side versus the macro strategists who tend to be much more gloomy. How much do we get a reckoning that sends markets in one way or another? Frankly, I think that this week, more than the CPI, earnings are going to be the big picture to watch.
Can I just squeeze this in too, Tom? Commodities, just briefly. Crude breaking down again. Copper's been breaking down since March. Your thoughts on that?
I thought a number of shops wrote up the weekend. I thought J.P. Morgan was particularly strong on hydrocarbons, but also, John, copper is, I never liked the phrase Dr. Copper. We'll let Chris Verone talk about that. But Chicago copper's down, call it 27%. LME copper's not where it was July 6th. But nevertheless, there's a weight there. That's a pun, John.
And China facing potentially more restrictions. I got the pun, Tom.
Thank you.
It was pretty funny, kind of. Futures down 6 or 7/10% on the S&P. On the Nasdaq 100, we're down about 0.9%. Look at euro dollar, very close again to breaking 101. Wow. 10103 with negative 0.8%. And as TK pointed out, Tom, just dollar strength right the way through G10 this morning.
Last week on our sojourn to Washington, yen didn't break. It is broken. This is not about the Abe assassination. It's about the elections. And maybe a calm there. So weaker yen, 137.
Lisa, your 10-year, 3.0691%, yields in a basis point. Welcome back.
Thank you. It is good to be back. A lot happened last week, obviously. I was tracking it, and your excellent job that you guys did. I want to pick up, though, on the euro, that 101 level, and really key that off of the Nord Stream 1 pipeline, which is shutting today for 10 days for maintenance. The fear is that Russia does not bring these gas supplies back online. What does that do? Sends Germany into recession. That seems to be the feeling. And if the biggest economy in the euro region goes into recession, that is negative for the euro, regardless of what the ECB does. How does the ECB respond to this? How do they deal with the potential for financial instability? And this really is a similar story to what we see over in the United Kingdom at 10:15 a.m. We have Bank of England Governor Andrew Bailey speaking speaking on financial stability, how much does he key off of the weakening in the pound? One commenter on Twitter this morning talked about how at least the pound wasn't the euro today, and that is the best that they could say with the pound at below 121.19. And then coming into the end of the day, we are looking for an auction for 3-year treasuries. The $33 billion of 3-year notes are going to be sold, and I know, Tom, you watch this carefully. I want to see the yield curve inversion on this space, as we've seen that yield curve inversion continue in the 210 space. John, we are looking for a 4th consecutive day of a yield curve inversion at a time when people are getting increasingly pessimistic.
You know, this is top of the list when it comes to what Tom missed when you were away over the last week. Lisa,
auctions?
Supply.
Oh, yeah.
Auctions for the Treasury.
Yeah.
Lisa, thank you so much. Twitter is one to watch in the pre-market. Getting slammed in a way that you might have anticipated, down and down hard by 7%. Truist put out some research this morning, Tom. If Twitter fails to bring the acquisition to completion, we would see the base case for the shares trading in the high 20s, reflecting 25 to 30% further downside from where we've been.
Twitter hired Wachtell, and who knows who Mr. Musk is going to hire. He has a relationship with Kravitz. But, John, this is going to be absolutely fascinating in Delaware, in the Chancery Court, which is the most British court we have. There's no jury, John, just very, very competent people. And I tell you, is it going to be original law? I'm not qualified to say that. But it's going to be a real interesting thing to see Mr. Musk, as we know him, before the straight guys out in Delaware. It's
34,
something.
23 in the pre-market. Let's pick things up with Chris Ferrone, the partner and head of technical and macro strategy at Strategas, a Baird company. Chris, let's start here. Something you're focused on. You put together what's happened with commodities. You looked at equities, staples versus discretionary. Can you just run through that research? It was a great note, Chris. Just what have you learned?
Yeah, well, I think a couple things. I say, number one, as you point out this morning, I mean, the action is in the currency market right now. When you look at FX vol and bond vol, it doesn't seem to jibe with equity VIX in the mid-20s. So I think there's something off there that will be resolved with greater equity vol in our future here. As far as the leadership backdrop of this market, I think relationships like discretionary versus staples or high beta versus low beta give us really helpful clues on the market's perception of risk. And, you know, we've taken commodities down sharply. We've taken oil down 25 or 30 bucks. And discretionary has given us nothing, right? So this idea that some pause in crude or some weakness in crude would suddenly recatalyze the consumer, I think the market is suggestive of that not being the case here yet.
Chris, you've got a beautiful, beautiful slide on short interest. Where's the gloom on Amazon? Where's the gloom on Apple, et cetera? Give us a clinic right now, a mini clinic on short interest and the lack thereof.
You know, Tom, this has really, really surprised us that, you know, S&P is down 20, NASDAQ is down 30. But when you look at the stocks that I think are viewed as most vulnerable or weakest here, these mega cap growth names, the short interest is just nowhere to be found. I mean, let's take, for instance, something like an Amazon. The short interest on Amazon is 1% of the public float. The stock has gone nowhere for 2 years. It doesn't make any sense to us. At the 2009 lows, you were talking about short interest of 13 or 14% on Amazon. Look at Tesla. Tesla, the short interest is 3%. That's down from 30% in 2019. So where's the short interest in the names where I think people should be most bearish on? I think that speaks to this overall level of complacency that I would argue still exists.
And Chris, going back to what you initially said, perhaps the stress is being felt in the currency market. And just as we're speaking, the euro did break that 101 level. It is below that now, heading very close to parity. At what point does this mean that something is breaking that's going to create something more significant in the rest of markets?
Yeah, that's a great question. And this is one of the reasons why we've been reluctant to make the capitulation call. Like, I get that the market's oversold. I get you can bounce. But have we seen a true capitulation when the forces driving this market are very, very macro-oriented? This is a currency and bond-driven market right now. And when I see dollar yen at 137, when I see euro at parity, I still think we're headed towards some collision here or some moment where some bodies float to the surface. And, you know, our call has been, it's the BOJ that ultimately is going to have to blink here. And the yen will weaken until the BOJ does.
And now, folks, with Chris Verone, your CTA moment of the month. Chris, not how do you pick a bottom, but once you get out of a bottom, let's go all John Maggie, 1946. How do you establish a bull trend? Is it off moving averages? Is it off a jump condition where the gap doesn't fill? Technically, how do you know up?
Yeah, it's a great question, and this is something we read about often. How do you distinguish between just a bounce or the start of the real thing? And it's always been our experience that the beginning of a new trend is preceded or accompanied with unmistakable momentum. You get these momentum surges coming off lows. One of the ways we look at that on any given day, the percentage of issues that are giving you a 2 standard deviation advance. So urgency, people chasing moves higher. We haven't seen it yet. Now, it doesn't mean we can't see it, but we haven't seen it yet. So those are the conditions we're looking for. I don't think they're in place here. We continue to remain prudent. This is a market that's bounced here over the last couple of weeks, but without a lot of momentum behind it.
Hey, Chris, great to catch up, to get your views, to look a little closer at what's been happening. Chris Verone, thank you very much. Down 0.5% on the S&P. Looking at some really interesting levels in the FX market. Euro dollar very briefly a break at 101. We're at that level right now. Euro dollar 101 and dollar yen 137. And Tom, if you looked cross asset at the macro picture right now, the yen is really the thing that just hasn't participated this year in a way that some people might expect. I'd say the whole year, Tom. The fact we've got yen weakness and not yen strength in this environment just speaks to the moment that we're in.
The advantage we have, folks, is on the fancy Bloomberg Launchpad. I can look at 20 currency pairs, and you get a cadence to it. And it varies day to day, John. The headline today is yen weakness out right now. My eyes are failing me here. 137. Oh, thank you, Lisa. 137. Oh, wait, what I learned there, John, what I learned there from Chris Verone is simple. He's just in search of Bramo gloom. He hasn't found it.
Good to have Bramo back. Futures, a negative 0.5% on the S&P. On the Nasdaq 100, we're down about 0.7%. Son of Desires coming up of Franklin Templeton at 7 a.m. Eastern Time. That's in about 50 minutes. From New York City, for our audience worldwide, heard on radio, seen on TV, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. Shares of Twitter falling today. The company's preparing to go to court to force Elon Musk to follow through with his commitment to buy it for $44 billion. Bloomberg's learned that a filing in the Delaware Court of Chancery could happen as soon as today. The court has rarely sided with parties who, like Musk, are attempting to bail on acquisition commitments. In the UK, Foreign Secretary Liz Truss is the latest to enter the race to replace Boris Johnson as Prime Minister. She's making tax cuts the heart of her campaign. She wrote in the Daily Telegraph that she would start cutting taxes from day one. Truss joins 10 other candidates in the race. The timetable for the leadership contest is expected to be set out later today. France's finance minister is warning that Europe must prepare for Russian gas deliveries to be shut off entirely in retaliation for sanctions. Bruno Le Maire called it the most likely scenario. He said the French government is trying its best to avoid energy shortages. And President Biden says the administration is still discussing possible action regarding U.S. tariffs on Chinese imports. The U.S. is considering easing some of the Trump-era duties. Meanwhile, the president and Chinese leader Xi Jinping are set to speak again in the coming weeks. Secretary of State Antony Blinken spoke with China's foreign minister over the weekend to lay the groundwork for a call. The president of Sri Lanka has agreed to resign hours after demonstrators stormed his official residence. Gotabaya Rajapaksa had stayed in office during months of protests over fuel shortages, surging prices and financial mismanagement. Sri Lanka is in talks with the IMF on a loan program to help pay for imports of both food and fuel. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
what's happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds. Season is coming.
It's a low bar going into earnings season.
There are bargains out there to be had.
Bloomberg is fastest with the numbers and analysis.
There's conflicting and complex cross currents. Strap yourself in for this earnings season.
Bloomberg, the fastest numbers and analysis you trust.
This Fed isn't stopping. This Fed is going to do 75 basis points, and when it meets this month. And this Fed needs to catch up, John. They're not just reacting, they are catching up. And that's why they simply cannot wait.
The brilliant Mohammed Al-Arian from New York City this morning. Good morning with Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Futures negative 0.5%, recovering just a little bit on the S&P 500. On the Nasdaq 100, we're down 0.6%. Where do you want to start this morning? Euro dollar very close to breaking and staying below 101. It broke that level in the last 15 minutes or so. Right now, euro dollar 101.06. Yields come in about a basis point to 3.0691%. On a 10-year. In the commodity market, we're down about 2% on crude, 102 handle on WTI. And Tom, a lot of questions about perhaps more restrictions on the world's second largest economy very, very soon.
Yeah, we've seen that, and there's any number of ways to go here. I would note, John, that, on a sleepy Monday, it's not sleepy. DXY is reaching out, as you correctly state, on weak euro there. John, can I note that Dr. Al-Arian had my tweet of the weekend? He wrote a blistering short tweet that basically said, with all the fancy people like Mohammed Al-Arian, stop worrying about the partitions of inflation. It is the gross amount of inflation that is crushing society. I thought the way he did it was with a lot of grace.
I hear you. He's worried about the stickiness of this, Tom. He thinks that's the most important question right now.
I agree with that.
To your point, you could come down from 9, 8, 7, 6. Do you settle at 5, 4? And how much longer do we need to deal with that?
And again, that's what folks, when I talk about the x-axis and you move along the x-axis, that's something the media doesn't talk about too often. They're much more interested in the ups and downs of 8, 8.8, 8.9. Nobody's at 9%. Emily Wilkins is not at 9% inflation with Bloomberg government. She knows the x-axis of the Biden administration. What an interesting weekend for this president of the United States, Emily. He goes to Riyadh. He's got a to-do list, but he is distracted by the issue of his age, his health, the energy to get to the midterm elections.
I mean, this is something that's plagued President Biden from the time that he was campaigning for the presidency, an argument that was made against him. And the fact of the matter is that the presidency is going to age anyone. Like, take any picture of any person at the start of their presidency, at the end, you can see the aging. Biden's got that right now, and there's really no amount that the White House can do in terms of messaging, in terms of other things that would change that. And there have also been concerns about just how much Biden's been able to interact with the press one-on-one, the amount of times he's sat down for interviews, the amount of times he's held briefings. All of those have sort of given Republicans a bit of an advantage in pushing the narrative that perhaps Biden should only be a single-term president.
Riyadh is not Bavaria. Riyadh is not Madrid. How will this trip be different than what we observed on the Tadeo-Hordern sojourn?
Well, I would say it's sort of the main thing here is that Biden doesn't necessarily have the support of his entire party behind him for this trip and for these meetings with Mohammed bin Salman and others in Saudi Arabia. There's definitely concerns about what Biden is doing, debate over whether he should be engaging at all. And you really saw that this weekend in the op-ed that Biden wrote in the Washington Post, really defending his reasons for this trip, laying out the goals of what he wants to do. But that doesn't mean that there's not still strong criticism within his own party for him taking this trip, and really questions about what exactly is going to come out of this one and what the future of the U.S. relationship with the Middle East will be.
Emily, I want to pick up on that point, the futility, and this was sort of the theme that I felt in a lot of the criticism about this trip to the Middle East. What can he actually get from this other than simply making promises to Riyadh in return for something that's ambiguous, considering the fact that they don't have that much capacity to pump more? Is there a cohesive narrative that you're hearing, and do we get the sense that there frankly is a tacit admission of policy failure when it comes to trying to isolate Russia and the damage that it has done in terms of their gas and oil supplies on the U.S. and European economies?
You know, Lisa, I think you really hit the nail on the head there. There are a lot of concerns and a lot of issues that could be discussed during this potential trip, but really a big question about what, if any, outcomes they're going to be. Certainly gas prices are on the top of everyone's mind right now, but as you note, there's not really a sense that we are going to suddenly see gas prices drop back to $3 after this particular trip. Biden has also talked about just the importance of having a relationship with the Middle East and with Middle East leaders. He's certainly meeting with a number of different countries' leaders on this particular trip. And he's talked about needing to sort of move forward in that relationship and have a constructive relationship with various countries in the Middle East.
But Emily, I want to tie this to the idea of tariffs on Chinese goods, which is also something that perhaps this administration is thinking of doing, lifting some of the tariffs. Is there a sense that any of the policy measures currently being proposed by this administration could have a material effect on an inflation rate with headline inflation heading toward 9% at this week's reading?
I mean, even Commerce Secretary Gina Raimondo said this weekend that even if they did have a reduction of tariffs on China, something that she is pushing for on consumer goods, it's not going to have a dramatic impact on inflation. You might see the price lower for some goods that a lot of Americans tend to consume, but you're not going to have that be an overall massive impact on inflation. And this is where this Biden administration is really trying to figure out what to do with inflation, because it's not something that they control. It's something that has a lot of factors going on. At the same point, Biden's the one in the White House. That means he needs to be addressing it. He needs to be figuring out ways to move forward on it. And I think that's partly what we're seeing with this trip, partly what we're seeing with this tariff discussion about these tariffs on Chinese goods. Just the administration really trying to figure out a path forward here when there's not really a clear answer of what the White House can do to lower inflation. Something that's a big issue for a lot of Americans right now and going to be a big issue this November.
Emily Wilkins, thank you. Down in D.C. and Bramo, we talked about this multiple times, haven't we? It's awkward, beyond awkward. There's some real tension between the criticism from this administration towards the Chinese Communist Party and the potential to remove some of the tariffs on Chinese goods.
Especially because there isn't a very clear benefit in terms of how much that could reduce headline inflation. And that's why I talk about that feeling of futility. What are you sacrificing on one side and what are you gaining on the other? And there have to be some real discussions about that.
Looking ahead to CPI on Wednesday, just a sneak peek at a survey. I'll put all the numbers out tomorrow for you. 8.9% is the estimate from BNP, HSBC at 8.9, TD at 8.9, getting close to 9, Tom. John. The headline median estimate 8.8. If you look for core, we're looking for that to come in just a little bit. So a bit softer on core perhaps, but headline inflation, TK, that could be a big number.
Yeah, I agree the core is where the analysis should be for global Wall Street. But John, I actually looked today, and there's a lot of fancy math Bloomberg goes through on this. John, 8.8 is the median number. When you look at the probability distribution of the survey, it's a little lower. It's skewed a little bit down. So I think the hysteria is toward 8.7-ish and not 9-ish.
The low estimate is 8.1. The high estimate is 8.9. Equity futures down 0.4% on the S&P, yielding a single basis point on a US 10-year. And look out euro dollar. Very briefly, a break of 1.01. Some real dollar strength to kick off a brand new trading week. From New York City, this is Bloomberg.
About what they call black soot caused by the manufacturing and consumption of these fuel products in the illegal refineries.
Oil theft, known as bunkering, and the refining of its spoils is worsening the damage from decades of fossil fuel exploitation, creating one of the world's most severe ecological disasters.
Our sacred forests, our homes have to give way to oil wells, and no one gets much benefit.
Imagine a resident of Port Harcourt who inhales this soot every second in 24 hours, 7 days a week, 30 days in the month, and for years now, we are dying slowly but surely, and our lifespan is reducing every day.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Live Live from New York City, here's the price action this Monday morning. Good morning. Futures just a little bit softer. We're down 0.5% on the S&P. On the Nasdaq 100, down 0.7%. Remember, leaving behind a decent week of gains on the S&P, up 2%. On the Nasdaq 100, up a little more than 4.5%. A decent week of gains in the face of a market that was pushing yields higher once again. Let's look at Treasuries, 2s, 10s and 30s. Last week, up more than 20 basis points on 2s, up more than 20 basis points on 10s. Your 2-year, 3.078%, just a little bit higher than your 10-year. That curve inversion sticks. What was interesting about last week is yields higher and equities were okay. But also, on Friday,